Hello everyone. The Trusting Disruption stage will begin in 5 minutes. Hello, everyone. The program is about to begin. Please take your seats. Please welcome Margot Avedijan.
Good morning. Is everyone's head exploding from all the information yesterday? Or is it from the hangover? So this is the Deltek Trusting Disruption stage, and Deltek is the most innovative bank out there. They're the first one to start banking crypto companies, and they work a lot with regulators, and they really helped with the DARE Act in the Bahamas. So it's pretty cool. In the expo stage, you can get one of these cards from Deltek, and if you scan it, you can win one of 101 different NFTs. And we also have a couple other grand prizes, like a jam membership. So definitely pick that up and scan the QR code. So the next panel is how asset allocators view crypto. And we have Jacqueline Melinek, Andrew Chen, Alex Felix, Daniel Kim, Joe Miranda, and Hugo Rogers.
Great, good morning. We are on the Trusting Disruption stage, sponsored by Deltek, and she introduced all of us. I'm Jacqueline Melnick, I'm with TechCrunch, but if we want to just go down the line and introduce yourselves again.
Great. Good morning, everyone. I'm Joe Miranda. I'm a partner with Cambridge Associates. I run our digital assets investing group. We're a global investment advisor with about $600 billion under management.
Alex Felix, the CIO of CoinFund, one of the leading crypto investment managers in the space, founded back in 2015.
Morning, everyone. Andrew Chen. I'm a portfolio manager on the investment team at Lockheed Martin's corporate pension.
Good morning, everybody. Daniel Kim, FBG Capital, one of the directors of investments there. We're a global asset management firm doing crypto mining, ventures, and market making.
Hi, yeah, I'm Hugo Rogers. I'm the CIO of Deltek Bank and Trust, so I'm part of the home team, and everybody knows who we are, I hope.
There we go, perfect. So I guess to start, can we just get an idea of like how you guys view crypto, especially when it comes to like asset allocation, because that's what the panel's about. I just want to get like a perspective.
Great. From our perspective, when you think about it in the context of a diversified portfolio, clients are basically motivated. We put it into portfolios for two reasons. One is it's a disruptive technology, and it could either really mess up something you've already invested in, but we also view it as a major growth asset.
We really view crypto as all of tech as we look forward, thinking about new infrastructure to power decentralized applications. It's a transition that's really led by consumers and developers that are thinking about how to pioneer their businesses on top of new technologies that they can control. And we're looking at just broad-based investments across many of the verticals that are applicable to traditional tech and how big they can be in the future.
Yeah, I mean, we technology, not to beat a dead horse, but and even though it may not neatly fit into a few different types of structures that are typical. It's venture-like in sort of risk-return conceptually for us.
Yeah, it's similar. We're looking at it as a alternative market, right? Another asset class, a different market where there's an innovative disruption happening, and just a whole different separate market on that front.
Yeah, I mean, we're looking at allocations into crypto as a kind of parallel portfolio in a multi-asset solution. And I mean, some people talk about diversification. Some people from traditional finance might talk about CAPM and correlations. We don't actually think that's a terribly useful way of looking at it, not least because there isn't the history of data of the correlations, but also there's such heterogeneity within crypto itself that actually you could have like an augmented asset allocation within this space, a parallel portfolio, and deliver all the kind of different risk return profiles, different length of time, liquidity, and so on, within a digital-only portfolio. So I think it's like an asset allocation augmentation. And I know several of the panel members are actually delivering those solutions. We are participating in those, and it's been a good journey to go on.
Definitely. So you guys all have like similar but different corners of the market. What are your clients saying right now in terms of asset allocation this year compared to last year? Like, what has changed?
The biggest change is actually people want to talk to me. You know, I started working with deploying client capital pre-crypto winter, and everybody thought I was crazy. And then I promptly lost 50% during the winter, and then people were sure I was crazy. And now I'm reasonably confident I'm the most popular person in the firm. And that's 1,300 people. So I went from basically 0 to 1,300 in the space of a year and a half. So I think it's really just a sign that institutions are finally taking notice, and they realize there's something. They may not be sure what yet, but everybody is focused on this.
Yeah, as a crypto manager, I'll kind of play the protagonist here a little bit and sort of give the perspective of what have we seen asset allocators focus on. First is clean structures. So we really differentiate our platform in having a venture capital practice as well as a hedge fund, but to keep the product simple, focused on where we think there's the best risk reward within crypto, and how to deliver differentiated strategies there, but being able to cover the entire waterfront. Asset allocators want to know that you're seeing as much as you can in the space, so that you're selecting from the top deals and top entrepreneurs that are coming in to build things. And then the last thing is we're seeing kind of a big shift in probably majority family office and high net worth to 60 to 70% of new vehicles being funded by institutions with long-term patient capital, and we haven't seen them before kind of focus on the underwriting process, which is typically a year, 6 months. It's long, and but they are underwriting for the long term, which is really important for the space. Now recognizing that crypto is a big part of their venture strategies going forward, and that they intend to grow their conviction over time in the asset class, and I think that's a material change for sort of the companies that are being founded in terms of longevity and potential.
Oh yeah, I mean, maybe this isn't exactly the question, but I'm just thinking back to when I first started getting into the space. I mean, first myself, maybe 4 years ago, which is still young compared to some of my colleagues on this panel. But when I brought it up in conversations internally, I was definitely the weirdo. And today, I'm still kind of the weirdo, but I guess
wear it like a badge of honor.
Yeah, exactly. Yeah, exactly. Red badge of courage. So I can't go into too much detail in terms of what we are doing and not doing, but let's just say it's a little. The receptivity is better than it was earlier, which is not saying much.
But also, it's like Felix, what you're saying is that the expectations change a little bit, right? Like before in the markets earlier, people were looking for very high liquid markets and expectations that, hey, we're going to get 100x or 1000x immediately, right? Now, like a lot of the projects coming in, even the investors are now expecting a longer term expectation and putting in more money, where now even like the token economics are changing more to the equity stage and looking to build out. And so like I think what we're seeing now is that the expectation is now coming more to you could say a digestible or expectation on like, look, there's going to be a long-term growth in this space rather than just a short-term, pump in it. So I think that drive and interest coming not just from the crypto native folks, but then all across markets are thinking about like, look, like it's not just one sector on the DeFi side, but infrastructure, everything else, that what else could be changed. And then you're seeing that now with all these other companies coming in from different industries, saying what else could we do together.
I'd maybe answer the question slightly differently. There's lots of venture on the board, on the panel just now, and as a sort of multi-asset manager, I can move in, move out, and kind of and choose and time exposure. And I would say actually maybe the other way around. Tokens are vulnerable. They look vulnerable here as a liquidity asset, as the Nasdaq is looking softer, as interest rate expectations continue to rise. So actually, I would say there's a kind of a shift. Is what else is there aside from tokens? Is there venture? What's this yielding and staking opportunity? So it's kind of like an understanding that maybe tokens aren't be all and end all. Maybe there is more opportunity and a range of opportunities out there, and I think there's definitely loads of other opportunities out there. There are utility functions, things like exchanges you might regard as utilities, and banks and so on. So there's an understanding that maybe you want to own picks and shovels rather than the gold itself at this point in time. So I would say that is a kind of a more material change, although I also totally agree with all the changes in terms of requirement for security and the maturation of the asset as well.
Yeah, it's a good point, because like a lot of the funds as well, like they are changing the structure of what they can do in terms of, because of what they're seeing from their LPs, right? Like, and you have different types of funds, focuses of being like either just a fixed income stable fund working on, or focusing on ETFs or so forth, and that's all coming in from a variety of different interests from the LPs themselves.
Yeah, yeah. No, I mean the risk profile is changing. Exactly. Maybe the volatility is dropping away in some asset classes, but it's like there's such a range of opportunities out there. It's like dig deep and you're rewarded. I think people know that now.
Yeah, for sure. And you guys are talking about like this demand, and you went from being weird to less weird, and like now people are actually paying attention to this, which is obvious because we have this conference. But what are some of like the concerns or risks that are still out there that either you have or you're hearing?
I'd say there's three. There's two that get some airplay, and then there's one that you pretty much have to be in the sector to really know about it. The first is simply regulatory. No one really knows. And that's why we have a bias in favor of things that are on the higher risk return profile, because if the regulatory risk applies to every investment, you might as well be like shooting for or hitting for third or fourth, third base or home run. And so regulatory just is still a big unknown, and I have no answers for my clients on that one. The second, of course, is environmental, because let's face it, the headlines are really easy to create these very divisive, driving click headlines on environmental, in particular electricity usage. And the one that you really don't know about until you're deep enough into it is simply that this is code, and things can be poorly written and bad things happen. So from that perspective, like the one that I actually think is most concerning is simply that like it's software and things don't necessarily turn out the way that they were designed because of an error in the code. And then I think the other two will resolve themselves in relatively short order.
I think what's really interesting is the risk reward here, as you note, is so big because of that arbitrage. This tech transition is very controversial, and many of the prior transitions from Web 1 to Web 2 haven't been as controversial, other than maybe IBM mentioning that you should keep your servers in your office and not move to the cloud for longer than they should have. But why is this one controversial? Because it's not top-down driven. So you're not having, the people on the stage here are not from Apple, Microsoft, and the FANGs telling you this is about to happen in tech. This is really bottoms up, as I mentioned, kind of consumer and developer driven. And so you have a big arbitrage between, half the people of the world don't think that crypto is going to be the bedrock of the new internet. So you're getting paid for a lot of these risks, right? From regulatory to the others. And another one I'd like to throw in the mix here is adoption. So consumer adoption of crypto is dangerous. These are bearer assets. You're in control of your own data, and it needs to be done thoughtfully, and it needs to come from some of the big tech companies that will be responsible for the aggregation of underlying protocols. So the best DeFi protocol that will be unleashed as the world's prime broker through, PayPal or Facebook or Venmo applications, because it can just be connected to through open source code. They have to do that responsibly. We need to teach people about text message 2FA. So there's a lot of education here and a lot of risk in how do we roll out the benefits of Web3 and the self-sovereign nature of all your data, paired with the risks that entails for billions of people, where the longer tail, the next incremental user of crypto does not have the risk tolerance of an early adopter or someone who is speculating on NFTs, or even someone who has made a business in the space. So that's a big risk, and it's not one that allocators mention to us a lot, but yeah, curious to get your perspective, Andrew.
Yeah, I mean, don't have too much to add from, Joe talks to a lot of my peers and whatnot, but something, I think you actually brought up a really good point, Alex. This is maybe the first asset class that retail got to first, and benefited greatly. And I think I think for better or for worse, when you're sort of an institution and left out in the cold, and you're like, oh, a bunch of internet cartoon characters are making millions. This can't be real. Like, this is garbage. And so it takes a bit of sort of like a psychological or mental shift to be, as I used the phrase yesterday, be ready to see the matrix. And an example of that is sometimes talking to some colleagues in the early days. Everyone here spent so much time looking at this space, you forget kind of what it was like before. And so, when you say token, maybe we think DeFi, maybe we think whatever, they think Doge. And no disrespect to Doge millionaires and whatnot, but it's a totally different conversation to have on that front. But circling back to the points about security and being bearer assets, that's not sort of I actually think that is one of the central kind of innovations. And I also think maybe it's a different conversation, but it's interesting that sometimes we want to shove it back into a box, aka the Bitcoin ETF, but different conversation. But yeah, getting that kind of behavioral shift and understanding the fact that you can hold these, figuratively hold these assets is a big mental leap for a lot of colleagues and peers.
Yeah, and look, we're the reality is we're still very early, right? And then, even though it's been about 7 to 10 years, even each market is still very early, right? Like, we had the crypto market, like Bitcoin and so forth, back in 07 to 09 to 2014, and then DeFi really got big in 2020, and that's like a whole separate market, right? And different community and different contracts and so forth, and then you have the NFT market. Now, the reality is when we're setting expectations with our LPs and everybody else, it's look, there's a lot of risk in terms of the ambiguity of unknowns of what's happening within the market, what to expect. There's still smart contract risk. The reality is there still is going to be hiccups in the space, but the amount of participants that are coming in, trying to fix and trying to develop, and the amount of capital to help try to build and refix everything is there. So I think that's still a common thing.
Maybe just to be take a slightly different tack, and I know there's a lot of conversation about regulation and the genesis of regulation. I like to think of ourselves being in a slightly privileged position because I work for a small, flexible, dynamic organization that people hopefully know, and in a small, flexible, dynamic jurisdiction. So in other words, we can move forward in a way and make allocations and consider all the products without having to be too laborious in terms of the conversation. So that's good. That's from a Deltec point of view, but also from the broader regulatory point of view, look what's going on around us here. The intellectual capital, the actual capital involved, the momentum in the space. You can see early parts of regulation being relatively easy, perhaps. consumer protections being key and so on. So I think that maybe regulation is, I hope it's a rolling stone that gathers no more. So I'm less worried about that. I do think that the point made about where this whole space has come from, where the retail investor being an early adopter and sort of that genesis, that means that there are kind of lots of unseen vulnerabilities, and I would highlight things like sort of excess leverage, maybe on people's personal balance sheets. There are vulnerabilities, and I use that to then, if I still have mic, maybe I do, maybe I don't. But anyway, okay, you still take it. I would highlight that in a world where liquidity is actually moving out, there will be vulnerabilities. There will be vulnerabilities to liquid investments, but there'll be vulnerabilities in illiquid investments as well. So that's a kind of a broad worry that maybe people should have in their minds.
Yeah, there's a big talk right now of like, it's all about when, not if anymore. I keep hearing that during this conference. And in terms of like actual allocation, I think the average is like 5% of someone's portfolio. What do you think it's going to take to get that higher? Should that number be higher? Or do you think it's fair that it's anywhere from like 0.1% to 20%?
Well, I would say that most in the context of 600 billion of assets, it's across that 600, it is tiny. The clients that I started working with, those portfolios early on, they're north of 10%, and they're definitely the outliers on institutional allocations. But they also have the benefit of deploying capital during the crypto winter, and it was.
What percentage do you think is zero?
The vast majority,
exactly.
Yeah, of institutions globally, yeah. And so I think most everybody is now just trying to make their first investment, and so they are literally starting out, with like, and it is a abnormally small investment. To the point where you're sort of like, it's a rounding error actually in their reporting. But they have to start somewhere, and it's only after they get comfortable in the context of their total portfolio and they understand this. This is most of the investments, I mean, I imagine, Alex, you get this, where people are like, you're our first investment. I'm not putting words in your mouth, but I'm putting words in your mouth. Where they just like, we want you to help us understand this sector. And that's exactly the way that I work with our client portfolios, where you have to start somewhere. And I would say that if you make somebody, if you really had to come up with sort of a range of initial targets, it's 0.5% to 2% is where they begin. But the reality is that could easily become 4 or 5%, in the right market environment very, very quickly. And with the volatility levels that this sector has, the impact on your portfolio of a 5% allocation that maybe has like 35 to 55% standard deviation is extreme. And so it has the impact of like a 10 or a 12 or a 15% traditional asset allocation, which is a really long answer to say that I think everybody's still echolocating on the right number. But I would say that most every portfolio begins at sort of like a 0.5% to 2% as sort of their initial target. And then once they get comfortable, they will start to think about it in the context of total asset allocation.
But can't you manage that volatility? In other words, you can use different not tokens at all, but different investments to change that volatility profile. So actually, you can lift your allocation, to a very significant level without actually blowing out your risk-return profile for clients. So actually, the maturity is kind of pick a number. It's like whether you think it's a future or not.
Some of the folks that we talk to, at least, they think about more on the cost basis. So it's like, how much have they
total
allocated
expense
to this
ratio,
space?
yeah.
They use the data point of what's my mark to market, what's my overall exposure as a helpful barometer for, am I looking for new managers? So they're going to commit to those that they're committed to. They're going to re-up with them if they're continuing to show good progress in generating some of those returns that people have been excited about. But I don't hear as many focused on, I'm just way too overexposed. And if that's the case, that's really just a small cohort of what we're dealing with. What I think is important, though, is this is all venture risk. Outside of Bitcoin, Ethereum, and Coinbase, everything's less than 5 years old. And it's really hard to say this should be 1% or this should be 5%. But people need to think about what their kind of discretionary, high risk, high octane reward bucket looks like, whether that's part of your venture allocation or just a discretionary, piece of alternatives that you have in your portfolio, that's the way to think about it. I think everyone in crypto now has gotten quite comfortable that that percentage is really, really high, and that's from a crypto fund manager perspective. But the depth and diversity of the markets now really do feel like you're getting exposure to a number of different trends, a number of different verticals, and a number of different stages that are very similar to how you've looked at private investing across many markets. That could be, credit strategies where you're, lending money on protocols and generating 10%. Looks very much like, the business development company, private credit world I came from, before I started Coin Fund and private equity. We're using massive leverage to generate some of your returns. You have, service provision companies that are servicing massive ecosystems, and government providers and banks. These people will have to face the problem of dealing with digital assets, and they will have to have these services. So like that's a really sticky, customer base. You have NFTs, which in their second year in existence are as large as the global art market, at $40 billion of sales. All of IP, might transition to NFT ownership structures again. You have, DeFi, a lot of the infrastructure. So I think that the diversity of how you invest in the space, the liquid markets as well, gives you a much better kind of exposure opportunity than just, thinking about this all being binary and this all being, highly volatile when you look at it over the longer term.
Yeah, I mean, to build off that point, so I was at a conference last week that was crypto focused, but mostly from an LP and investor side, less from a builder and manager side. And the point I was making to folks was, at this point, it's like if you have one person solely focused on crypto, that's not enough to really be, educated. You could have one person solely focused on, like, maybe not Solana NFTs, but just like there are already crazy levels of specialization that you can do, across DeFi, NFTs, and then each base layer, and then it can get really crazy. So, got to do your homework. And I think if you're going back to the original question in terms of how much to allocate, I mean, that's kind of up to you as the investor in your level of comfort and your understanding of risk in the space. Maybe to copy what I think Novo has said. If 0.5% of global wealth is in crypto and you have no exposure, then you're short that in sort of your benchmark. I mean, that seems like a little bit of a FOMO way to explain your allocation, but it's something to think about. And it's not just, I mean, I used the example before, it's not just Dogecoin, and it's not, I feel like as a skeptic, you can cherry pick the example you want to say, oh, well, this is all, a waste of time. But if you actually dig in and kind of see what's happening, then I think those with a critical mind will be a little bit more receptive. So.
Andrew, one question for you. So SBF said he thinks $2 trillion come into the space. I think that's directionally right over the next 5 to 10 years. What do you think about that number?
That's my job. What do you think about that?
All right. Over the next 10 years, maybe I've drank too much Kool-Aid, but like if we're talking about this as being so transformative on every level, that to me feels low.
Yeah.
I mean, where are we right now? A little less than 2 trillion. 40% of that roughly is Bitcoin, and 20% of that is ETH. And there's probably in similar conversations you've had about NFTs, it's like NFTs are just a fraction of total crypto market cap, but to fulfill all the vision that you're talking about, even getting part way there, that's supposed to be way more than total crypto market cap today. So I don't know what you want to lump into it, but if you just call all of it, 2 trillion over 10 years seems like we've, quote, failed.
It feels like it's whether the use cases actually get accepted and proliferate. If there's one use case which is really embedded, which is BTC as store of value, and to be honest, that's not even secure yet because there's a movement with Nasdaq and liquidity right now. So that question is still not totally settled, but it's more settled than any other question. Then you have to see whether these other use cases, so Web 3.0, smart contracts, NFTs, whether those use cases actually bed in, proliferate, and move into the mainstream in a way. Then I totally agree. The number may well be underbaked.
Yeah, and before I forget, examples like, I mean, we talk about financialized use cases, but neither support or against, but just stuff like Helium or Hive Mapper, or some of these things that leverage the token kind of concept, but tie it to sort of, quote, real world use cases. I think we're sort of at the tip of the iceberg there. Be very interested to see what happens.
Cool. I guess one of my questions I had for you guys, because you all have been in this space for like different amounts of time, you could take this towards asset allocation or you could take it however you like, but what has been like one of your biggest like aha moments working in this space?
I gotta think about that.
Aha.
I had one the other day where we were interviewing an 18-year-old, and she said, "I have a question for you. Why is everyone I'm interviewing with so old?" And what I realized is, yes, we're crypto boomers now, and we need to recognize that, but that there is a generation of people that we're hiring and working with now that underwrite code, and that's all they've known how to do. So we have a lot of us up here that have made the transition from understanding the corporate finance toolkit, understanding traditional finance, valuation, how to think about new business models, and then there's a rising tide of young folks coming through college. One of our technical analysts, he did 3 internships in college and crypto startups and crypto funds, joined us full time after he graduated, and like this is what he does is underwrite code, and he understands the big risk there in how we're rewiring a lot of the systems that we're going to use, but it's a new breed of skill set that was not taught on Wall Street. It will be created in crypto here, and I think it's going to be really powerful in many ways going forward. And so I think one of the big aha moments for me is like recognize how important this sector is from a jobs creation, from a opportunity set for our youth, and to do our best to be good stewards of using this innovation practically and in ways that benefit the world, because it is one of the few threads, I think, in a macro environment that we have today, with the war in Ukraine and others, that will keep globalization together. Crypto networks are being adopted globally all over the world, day one, and math is global language. So I think it is a really interesting nexus of what's important to our next generation, elucidated through a conversation I had with an 18-year-old who told me everyone is old.
Can I just add to that, because it's slightly the same point that I want to make. It's like meeting young people whose whole like financial existence is actually like on chain, and I mean, I'm a bit older than that, so that whole like the trust in the system is so complete with a cohort that was a surprise, a bit of an aha moment for me a few years ago, realizing that people wanted to be paid, wanted to make all their payments, just wanted to live that digital financial life, and I think that's quite amazing, because there's the future in front of you potentially.
And maybe bringing those 2 points together, or the previous point, I was at an event. I don't know if you're familiar with Matthew Ball, but he writes a lot on metaverse and pretty cogent thoughts. He made the point that basically we ain't seen nothing yet, and that the 2020s are where a lot of non-skeuomorphic business models come into play, because this is the generation of kids who grew up playing Roblox and Minecraft and all these things. Then they become adults and make money in a sort of gamified existence, or in terms of how they interact. This is stuff that's probably going to blow all of our minds as crypto boomers.
I am continually surprised at my complete inability to predict what will be the next hot thing. And so I think my aha moment is I actually have no idea, other than I know that there's this meta wave, and it's probably over the next 30 years. And as long as you have broad exposure, you will catch whatever is the moment. But DeFi summer, no one thought NFTs would be where we are today, and everybody assumed that DeFi would be still the hot thing, and then NFTs come out of nowhere. And you could even break it down into like what's hot within NFTs. So I think my aha moment simply is that I have no clue what's going to be hot, and other than that blockchain is fundamentally disruptive, and it's disintermediating, and it's going to shake everything up. And the fascinating thing for me about it is that the young people, or anybody here who's here, is just here because they love the idea of what it has the potential to do. When you think about it in the context of like the day jobs that are out there and people are just going into work or working from home because it's 9 to 5 and you get paid for it, blah, blah. They're just doing what they have to do to eat. And this is a space where everybody's doing it because they love it. And it's just a fundamentally much more fun place to be than sort of in the real world where everybody is just showing up because they kind of have to.
Yeah. And I think what we're all seeing is like, there's just different communities coming in, right? Like the NFT market, what I realized was like the NFT market is completely different of the community versus like the DeFi community versus like the Bitcoin community. Everything is very different. And you're also seeing like this whole growth in changes of like, who's coming in. And so you can't really say it's like, one's gonna be a maximalist or not. It's just that there's always gonna be a new community that may come out from the younger kids or any next generation. That's just a whole change that you can't expect and see.
All right, maybe this is for everyone but Joe, because Joe said he can't predict the future. But this is my last question. Like, what's next for asset allocations, portfolios, whatever it may be? Like, what's the future going to look like? What do you guys think?
Oh, well, that is easy. A lot more in the portfolios, yeah. And we'll be up to, I think that 5% is going to be very realistic in the next couple of years.
There we go.
Circle back to me. I don't know what's next in asset allocation, but I can talk about what's next in crypto.
I don't know if this is necessarily a profound thought, but I think one thing that really is missing in the institutional kind of approach to crypto, broadly speaking, there are a handful who have bucked the trend, but hey, well, we are going to be long ETH or long base layers or long the space for the overused term, for a long period of time. Because I was thinking about this, it seems like a lot of the zeitgeist right now is around VC, because it's sort of like a structure and a concept that folks are used to. But where are these projects going to exit into? They're going to exit into the token markets, and there's got to be like a sustained, strong hand, I think, to bid this stuff, and I think that potentially is where some of this might evolve to, or I hope it is, so that the space can grow broadly.
Yeah, I guess on my side, it's, we kind of seen this past year, like 3.0 being validated. You have all the crypto native guys validating and coming in. Now you're kind of seeing in the next phase, maybe it's going to be like a 2.5, kind of like a revert back of getting that infrastructure and that bridge to get the mass market to come in. And this is kind of where you're seeing that structure being changed, not just doing token economics, but more equity coming in, because these are longer term projects that are going to develop out and grow out until 2 to 3 years. And it's going to be that bridge to, validate how do we get that mass market to come in as the next phase of crypto.
I guess just to, go for it. Just to add one thing, when people have been focused on the VC markets as kind of the defensible way to bet early on crypto projects, and I wanted to tee this one up for Hugo before I passed it off to him. But one area that institutional investors are still very uncomfortable is in the liquid token markets. And despite all the fear that everyone has that Ethereum at a $300 billion network valuation, is that right? Similar to like how you look at Amazon today when you strip out AWS, and these networks can potentially be that big and that powerful as we look forward. Will there be 4 operating systems? We have a couple today, and I think the market might consolidate a little bit, but there will be some really core operating systems out there. And so a lot of the institutional money has gotten comfortable with the venture capital strategies because they are cash in, cash out. They're keeping investor classes, very aligned in the interests of how they're monetized in the future. But I think that we're just starting to see allocators and let's say the top ranks of those allocators understanding nomenclature in crypto. So that is, what is a token? What is a blockchain? How do we strip this all away and say, like, tokens are integral for governance, monetization, and security? And that's important. To owning a crypto network, you must own the token or the digital asset. So if I'm to call anything that's a little bit controversial, I actually think there will be a lot more participation from institutions in the liquid side of the markets, kind of supporting what we think might be, inflated valuations today, but could actually be quite undervalued in the future.
Yeah, that's really nice. And so I'd actually agree with that. It's like you get to a point in time where the heterogeneity within tokens can actually start coming through, so correlations can go down. We might see some winners, some losers within certain use cases and so on. So that is potentially the next big thing, being able to identify quickly. I don't know, picking winners is maybe a bit of a mug's game, but identify quickly the changes that are happening and trying to get ahead of that within, let's say, tokens or within the different opportunity sets. But I'd also, I had one lined up, so I'm totally in agreement, but I would also come back to that regulatory point as well. If there is regulation, if there's momentum behind the regulation, particularly out of the States, because that's where it really matters, and there is momentum here, there's momentum in this building, which everybody knows about. So if that regulation comes through, then you have a potential step change. I don't know when it's going to be, but that step change is, again, it's elephants getting through a narrow corridor into a crowded room. Prices can move all over the place at that point in time. So that's maybe one to watch out for as well as the next thing in asset allocation.
Great. Thank you guys so much for joining us on stage. Appreciate it.
Great. Thanks, Jackie.
Thank you all.
Thank you.
So who in the audience has an NFT? Anyone? Cool. Well, you can either get more or win your first one. If you go to the expo, you can get one of these Trusting Disruption Dell Tech cards. And we're giving away over 100 NFTs. So definitely check that out. I also heard someone's giving away bikinis, but I looked around, I couldn't find them. So if anyone knows where the bikinis are, please let me know. So this panel is called Expanding the Crypto Investor Universe. We have Zach Seward, Steve Elric, Jalek Japutra, Rishi Khanna, Slava Rubin, and Michael Weiss.
Over here.
Should make this.
Hey friends, I'm Zach from CoinDesk. Thanks for being here today. We're going to try to keep this fun, lively, maybe spice it up a little bit. Should be fun. We're talking about expanding the crypto investor universe. And I think we have some really nice perspectives on this panel, both from the world of crypto itself and the world of fintech as they explore products that make sense for their customers. So we're going to go down the line, quick intro, say who you are, where you're from, and what's your favorite animal?
Oh, wow. That's a new one.
It's a new one.
Jalek Javanputra. I'm founder and managing partner of Future Perfect Ventures. It's a fund I launched in 2014 to invest in decentralized tech. We are now investing out of our third fund and do seed investing. We were early in blockchain.com, Blockstream, Ombra, BitPesa, The Graph, Dot, and many others. And oh gosh, favorite animal, elephants.
Nailed it. Slava?
My name is Slava. I'm one of the founders of Vincent, with Vincent.com. We're democratizing access to alternative investments. So we have the largest database of alts on the internet, over 150 partners, over $5 billion of deal volume at any time, and have like 50,000 registered investors and 400,000 users that have used it. So my favorite animal is a rhino.
Hi, I'm Michael Weiss. I'm a co-founder at Yield Street. Yield Street is the largest direct-to-consumer private market investment platform, and we are helping the retail investor build a diversified portfolio of private market investments. And my favorite animal, I'd say, is my 3 kids. Nice.
Rishi Khanna, CEO of StockTwits. StockTwits is one of the largest social media platforms for retail investors and traders. And we recently launched trading as well directly right on the platform. And my favorite animal, I'm going to go with the turtle.
Solid.
Steve Ehrlich, co-founder and CEO of Voyager Digital. Voyager is a publicly traded company, a cryptocurrency platform for U.S. traders and investors with over 1.2 million funded accounts and over $5 billion of customer assets on the platform. And my favorite animal is the cheetah because I like things going fast.
Nice. For the record, my favorite animal is the gibbon, the long-armed monkey that swings from tree to tree. That's what I got. All right, let's talk about some crypto stuff, though. So I think, again, we have some really nice perspectives on this panel. And I kind of want to probe our title, Expanding the Crypto Investor Universe. Why is this even a problem? This is something that has been around for over a decade. We still have conversations on panels like this as to how we prod this thing into more growth. Still a pretty small sliver of the world has access to crypto, and it's always interesting to think about ways that that pie can be grown. So I want to really start with my fintech crew, which I sort of see as being in here. As you guys roll out crypto products, what are you hearing from customers as it relates to pain points? Why haven't they been here sooner? And when you talk to them, what are they saying? I'm going to start with Slava, and then feel free to jump in.
Sure. So people are coming to Vincent to search, and they're looking across the entire internet at what their options are. And I would say that, to summarize, I think the 3 issues of why this panel has this title is, 1, crypto people sell too hard to crypto people, and that's a very small market. And I think we need to figure out how to sell beyond crypto. It's kind of like saying in the public markets, hey, are you into like small cap stocks from Idaho? Yeah, let's like really try to sell those really hard to people who only like small cap stocks in Idaho. We should really try to be going after mainstream, and I think that it doesn't happen enough. So that's 1. Number 2, I think that there's a UI issue, a user interface issue for selling crypto, both from the security of it, the seed phrases, the having to hold it in hot wallets or cold wallets, or whether it's just, whether it's an ETF or not, how you actually access it, how safe it is or not. And that needs to be solved. I kind of think about it, I'm aging myself like Telnet versus like AOL Instant Messenger versus WhatsApp. Like that's just a UI issue to me. And then number 3 is definitely like, we try too hard often to sell crypto as crypto, but really it should be in a broader allocation strategy. And too often people don't want to talk about any one asset in itself. They want to think about it in their allocation of their net worth. And I think that is an important way to expand how people get into crypto, which references back to number 1 as well.
I like those. I think that I could expand a little there. I think, 1, it's part of normal market adoption, right? So crypto is still new, and we need to continue to educate people a little bit more on why crypto should be part of portfolio allocation, like Slava said. 2 is, here at Yield Street, I like to say that I have 400,000 users that we're responsible to help them think through portfolio allocation and what the future of their portfolio looks like. It's not just stocks and bonds anymore. It's public product, it's private market investing, and it's crypto. And so every time you open one door, there's 8 behind them. And crypto is really complicated to understand where to place those bets. And people don't feel like they have the time or the ability to get educated and make the right investments. And the convexity and the likes of Bitcoin and Ether and some others have gone beyond, what they're looking for. They want to find the next one. And so they get lost, okay? And the third is the folks who are actively investing in crypto and NFTs and more broadly in this market are very technologically savvy. They're willing to sign up to multiple different platforms and trade fiat for Ether and Ether for some other coin and start moving around. The typical person, the typical retail, the typical consumer has a job, they're busy, they're not as technologically advanced, they don't know where to go, and they want things to be easier for them. So what we've done at Yield Street is said, hey, we're not going to be smarter than some of the people you're meeting or listening to here at this conference. The right way for us to provide crypto investments to a broader audience is to partner with some of the bigger players. And so we've done things with Pantera and Osprey and some other big platforms that we could talk about, but it goes to the UI. It's about making it easier. It's finding the right investment. It's educating people on why crypto should be part of your portfolio and doing it for them in a way that's trusted. To us, that's the only way you're going to cross the chasm of getting real adoption of crypto in mainstream. And you need it.
Joel, I want to put you on the spot here, actually, because I think, like, you hear some of these pain points often, and I want, like, from your perspective, as someone who's been in the space since 2014, is it the same pain points that you've been hearing all these years, or has the narrative around what is stopping people from entering the space changing in meaningful ways?
Yeah, I mean, my perspective is there's so many more people who are engaged in this sector than there were in 2014, and we've made a lot of progress. Even though it looks slow from the rest of the world, it's still a small percentage of the world that actually has a crypto wallet. Yeah, it used to be, you had to go in, and if you wanted to accumulate any significant position in Bitcoin, it would have to be, through many days and weeks of accumulation. You don't have to do that anymore. There are more exchanges, there are more OTC desks, there are prime brokerages. So there's a lot of infrastructure, even from the institutional standpoint, that exists that did not exist back then. And the regulation has also become clearer. It's certainly not clear, but it's a lot clearer than it was in 2014, which kept a lot of institutions away. Now, for individuals, I would say 2020 was a major turning point, as it was for institutions, in that people were home. They were exploring different types of assets. I mean, we've seen it through the equity investment platforms too, and so there's become more familiarity with the asset class and how to buy it. However, we are still not in a seamless environment. People are still worried about losing their assets. They're, especially with NFTs now, with all the phishing scams. So I think the industry, and that's what we're actively investing in, is how do we make this more seamless, more usable? I mean, compare it to the internet. It was very clunky to use the internet. Most people would rather use a phone than send an email in 1994, 1995. Now everyone uses email. So we're going to get to that point. But there's a lot of infrastructure build out that needs to happen for that.
Yeah. Steve, similarly, you've been in it for a while, so I kind of want to put that same question toward you.
Yeah, I mean, I think I have been in this for a while. I was early guy at E-Trade in 1999, so I've seen this. I've seen the adoption of online brokerage, and the things we're talking about now are the same conversations we had in 1999 and 2000, where how do you get more people into online brokerage? Like, do you trust the internet? Do you trust sending your money, a check somewhere? Remember, there was no ACH systems or anything like that in 99. So you would send a written application to Sacramento, California for E-Trade with a check and hope it actually got through. And not until checks cleared a week, until 10 days later you were crossing your fingers, and so you had to get that adoption. But I think when you think about where this industry is, one of the things I think that holds it back, and that we've all got to do a better job in this industry, the apps are there to make it easy. Our app makes it easy. You can open an account, get funded, KYC, 3 minutes or less, fund your account, trade. It's education. I think we're all playing too much on FOMO. The ads that you see, the marketing that gets done is all about FOMO. FOMO is not going to win the general person over. We've got to educate them as to why this industry, why blockchain matters, why a lot of the layer one protocols matter. And if you start educating that way, we'll get more adoption. Just the FOMO is not going to work. It's going to be short-lived, and you need to get people to understand that you're actually changing technology for the next 20 years. And I'll finish with one other thing on that. In 1998, Oracle did a great Super Bowl commercial, iconic Super Bowl commercial, where they talked about a technology revolution. And they were going to be the ones that changed the way we do business through their products. And they called it a technology revolution. If you take any of the other layer 1 protocols today, Solana, Hedera, Algo, Avalanche, doesn't matter. Put that in Oracle and take out the R and make it an evolution. That's what we have to teach. That's what we have to educate, because this technology will change the next 20 years. But if we keep trying to sell FOMO, it's not going to work. We got to sell education.
Yeah, and I want to expand on that because we look at it the same way as how do we educate our community, which has historically been very equities biased. And we actually did a survey this week just to check, and of our community, 40% still don't own any crypto, and 50% of that 40% said they never will invest, right? And so the question is, why is that? And I think a lot of that is about education, and we take a very community-based approach, but we also, there's teaching them about different, blockchains, different protocols, and, where the value is over time. But I think it also comes to the multi-asset class approach where you can't, I think over time you can't make it feel like so different and so scary compared to equities or options or, traditional asset classes. And that's why we take a very multi-asset class approach with our community. And hey, how do we make the tools just as easy? You can buy, a stock just as easily as Bitcoin, and, and you want to be also careful about maybe what coins and tokens, right? Because there's a lot of volatility in the long tail of that. And so leveraging the community, leveraging our 6 million plus members to learn from each other and learn from your kind of public facing profiles and stuff is a different way that we're trying to tackle that same educational kind of perspective.
Nice. I like the granularity of that data, so thank you for pulling that. Appreciate it. Michael, I want to zoom out a little bit, right? I want to talk about this sort of generational moment that we find ourselves in, where crypto obviously exists in a world of many other asset options out there. What's the big picture? Give me the 30,000-foot view in the markets more generally, and where crypto fits in now, and obviously where it might fit in the future.
So I think that's a great topic to jump on, and it's well positioned on the heels of education. And so zooming out, you got a couple of really big macro trends that I think are important to pay attention to. So one is you have $70 trillion moving from baby boomers to the next generation, and we don't behave the same way our parents did. And so we're not going to go for a round of golf with a 70-year-old super overweight advisor telling us why some bond fund is the place to invest. And so at Yield Street, we've been thinking a lot about the future consumer and how that consumer is going to interact with his or her portfolio. And when you think about that, you also have to ask yourself, the way in which most of us were educated was a function of a public portfolio, right? And the portfolio was designed to give us passive income and asset appreciation. Some call it 60-40, some look at it from that perspective. At the end of the day, public product alone is not solving for wealth creation. And we continue to have an issue in the US and globally around having a wider and wider gap between the have and have-nots. And the way in which we at Yield Street believe you could solve it is really to help people make more money. So how do you do that, right? So now let's take a look at the institutional investors and their allocation. So pensions and endowments have moved up to 40 to 50% of their money in private market investments. Why aren't we? If all the smart money is moving there and people who are paid fortunes to make decisions on portfolio allocation are moving to private markets, why is retail still 95% invested in public product? And the reason historically had been some of the similar situations that we're talking about crypto now, maybe when we started our business 7 years ago. And so we believe at Yield Street by 2025, you're going to see close to 40, 50% of a person's portfolio in private markets. So I'd like to see a world where you have 50% public product, 40% private markets, and about 10% crypto and emerging for now, 5+ years. And how do you get there? So number one, education is key, right? You're fighting headlines for 100 years around public markets. A consumer goes into Shake Shack, enjoys a burger, goes and buys stock. Balance sheet, I don't know. Revenue, who knows? Margins, what? And so there's this emotional connection that's created through either an experience with a product or through a headline. So at Yield Street, we need to continue, like you guys were just talking about, focusing on education. What is private market investments? What is crypto? How is this going to make a difference? Why is it important to be in your portfolio? Step one. Step two, you got to make it really easy to invest. So think about things like Vanguard, think about things like ETFs in the past that have brought tremendous flow of capital once it was easy to invest. So we need to think about making and creating model portfolios for private market product. And then you got to have liquidity, which is an issue in part of the private markets, in some of crypto, not all over, but you're solving that with chain, you're solving that with tokenization, we're solving that with expansion of regulation in our favor over time. Too slow, agreed, but it's coming. And you got to have a lot more trust. And so when you put those 4 ingredients together, I think in 5 years, that's how you start to see the retail portfolio completely and dynamically changing to 50, 40, 10. And I think that, for us, that's how we communicate it.
Yeah, no, and I think to that asset allocation question, right? What are the right numbers? You know, I don't know what they end up being, but I think the vehicles and a little bit of the regulatory conversation, right? Like, I live in New York State. I can't trade crypto on my own platform because of our lovely friends at DFS. You know, so there are still a lot of regulatory burdens against crypto. You know, but we're seeing slow change and trust and adoption coming from the bigger institutions. You know, we were just talking backstage, the Fidelity announcement of allowing Bitcoin in your 401ks, that's a big deal, right? I mean, a lot of people have their assets via retirement accounts and retirement funds. How do we unlock and give those accounts access to all the asset classes that we do have access to, whether it's alternatives, whether it's crypto, whether it's, you know, whatever, you know, NFTs, whatever might come next. So I think the on-ramps to access and putting your capital somewhere, right? Because the long-tail users don't have the, you know, $50 billion pension fund portfolios. They have $500, $1,000, you know, $5,000. And how do we unlock that? How do we help you educate to learn that you can do that? And those kinds of tools are available or are becoming available. And then how do you build the trust, right? Like,
but I also think as an industry, we need to think about what type of products do you want to be used as part of major adoption, right? Like solving for edge cases and meme coins and altcoins and coins that are fraught with, you know, litigation or other issues are not the ones that we should be thinking about helping us cross that chasm and making crypto mainstream. I think it's like an index, right? Investing alongside some of the biggest investors in blockchain, Web3, new technologies, in potentially in ETF or other solutions. Let's try to solve for like the 80% of the population and really bring crypto more appropriately into portfolios and a little bit less on maybe the individual edge cases or some of the smaller allocations.
I think the headline that you mentioned about crypto being put into retirement accounts is a perfect example of a UI change. And I think that UI will have a significant effect in the days and weeks and years to come because most people don't actually think about their investments every day or think about their trading 24 hours a day. In the public markets, they've solved for this, which is in the public markets, like over 90% of the money is actually passively managed by somebody else. And the people that are investing that money think about dinner, vacation, and where they're gonna go, you know, next week for lunch. And that's not what's really happening in crypto. Crypto, you have to know the right woman or the right guy at the right time to do the right trade, to bottom tick or whatever, and like maybe you're gonna do it yourself, and which exchange are you gonna do it? And it's the exact opposite. In the private markets, it's over 90% actively managed, that you have to manage it, as opposed to passively hand it off somewhere. And there's a lot of opportunity, and regularly our investors are asking for a better interface, a better way to navigate that in not having to make all their own choices. So we have our own proprietary data where, you know, hundreds of thousands of folks are searching. So we can actually tell you that our data shows that 50% of the searches for alts, and when I say alts, I mean real estate, venture, debt, crypto, art, and collectibles. We simplify the world into those 6 categories. 50% of it is going to the 2 behemoths, which is venture and real estate, about 25% each to simplify it. Then debt has a little bit, and then you basically go a third, a third, a third for the remaining 45 between art, collectibles, and crypto. It's been really interesting to see crypto rise and fall as basically the risk-on versus risk-off markets. But what's interesting there is already 50% is into this stuff that most people think is tiny, meaning crypto, collectibles, and art and NFTs. There's already that demand, and that demand, as you were saying, generationally, is gonna keep on shifting forward. So it's really about figuring out how to provide the UI, which is the vehicles, as you mentioned. What are gonna be the regulatory infrastructures? What are gonna be the products? Who's gonna be advising you? How are you gonna get into this without having to hand pick and choose each of these different things? Because in the public markets, that's not what most of the people in this room do, and that's not what most people in America or on Earth do, which is they don't try to pick, you know, is this the right token? Is this the right airdrop to get? Should I get into this whitelist? That's not actually what happens. That's actually why I think the market is so small, because going back to my Idaho example, we're just selling to each other. We're like, oh, you want to get into this whitelist? We're not trying to figure out how to bring in 10x or 100x more of the mainstream people that don't actually care about those details, but do want the exposure.
I want to rewind and zoom in on the regulation question, because I think it contributes to sort of the headwinds that people face when they consider entering the crypto markets. Hey, is this stuff legal? Am I going to get in trouble? Voyager is a little bit in the hot seat with some state securities regulators over a product that's been increasingly under the microscope at other companies as well, sort of the yield product, right? State securities regulators are saying, hey, it looks like a security to me. I don't think you guys should be doing that. Companies in the space disagree, and I want to ask you for more details on that situation, first of all, and again, how those questions relate to this big question of what's holding people back from jumping in.
Yeah, well, first and foremost, they're not securities. I don't believe they are. There are 9 out of every 10 lawyers will say that. They're not securities. And what really bothers me is 2 things on that front. One is you've got hyperinflation of 8%. So if you come to my platform and you get 9% on USDC, which is, Jeremy's here, it's backed dollar for dollar, it's a stable coin, no risk, and you earn 9%, you're basically treading water, right? The dollar you made a year ago is worth the same today. And regulators are saying, well, wait a second, maybe that shouldn't be offered. So what they're telling their constituents is you should be worse off a year from now because we're not letting you, tread water. And you know what happens when all of a sudden people's disposable income and the amount that they can go to the store and spend decreases. That means those stores can't hire enough employees. They got to fire employees, which means we get into this spiraling recession because now there's not enough disposable income in there. So it really should be something that should be embraced rather than pushed back on because everywhere else around the world, you can earn those yields. So are we allowing the rest of the world to be better off than our own residents and citizens of the US? That's one. 2 is, every state has to go to the federal government and get money. They're always asking for money. And so now you have a product that allows people to earn some rewards, some yield, and it becomes taxable. What do states love more than anything else? Taxable income. So, don't you solve a couple of problems with this rather than trying to cause another problem? So to us, again, we don't think they're securities. 9 out of 10 lawyers will say these aren't securities. That's yet to be fought through. It's never been tested in the courts yet. We'll see what happens on that front. But I do believe that these products are what people want. And when we come out, we're launching our debit card. It's all based on USDC. When you think about adoption, the ability to use a USDC stablecoin every day and swipe using that's going to help adoption. And I think the regulatory environment will start coming along here. I think there will be thoughtful regulation. It's going to be painful, and there's going to be bumps along the way, though.
Jalak, I want to put you on the spot here because I think venture capital firms have really sort of taken the lead in the education effort on the regulatory side. There's a lot of conversations in DC that are, hey, how can we sort of educate the regulatory class about what these things are, what they're not, how they might work in a compliant legal framework. Like, from where you sit, how are those conversations evolving, and what are you seeing in terms of progress on the regulatory side?
I mean, I've seen a lot of progress. If you just look at Biden's executive order, you listen to Janet Yellen's comments, I think people who haven't been following this space for a while may say, oh, it's a big nothing burger, but it is a lot of progress to say that, we believe that this sector is here to stay, that we want to encourage innovation. These are the most obvious things I would hope the government would say, but that's very different than, again, even 5 years ago. And if I look globally, and we have been investing globally, and the whole reason I got into the crypto space in 2013 was I was born in Kenya. I've spent a lot of time in the emerging markets. I just saw right away the need for a self-sovereign currency. And then started thinking about all the ways that this underlying blockchain technology could be used, through microtransactions, through ownership mechanisms. So everything that we're seeing played out was part of our thesis in 2013 and 2014. And I can say, every country back then wanted to ban Bitcoin. Maybe not North Korea, but other than that, And so what we've seen in the evolution in places like India that have gone back and forth, and the Supreme Court overruled a ban on banks banking crypto companies. And then we've seen Polygon, one of the largest cryptos, come out of India. We've actually seen any country that has tried to ban it, there actually more innovation happening. So India moved to a peer-to-peer model when that happened. And so DeFi, I believe, took off because of the amount of governments that wanted to kind of ban more centralized exchanges. So I think regulators around the world have seen that happen and realized that there is no banning this. They can regulate it, they can tax it, which is what they're all trying to do, and they are learning. Now I think it's incumbent on the industry, though, to self-regulate and make sure that we don't allow bad actors to proliferate, because that's just going to set us back in terms of having more positive regulation in the sector. So I think we've made a lot of progress in terms of educating regulators, and now we have to make sure that we stay engaged, and also showcase the use cases that are emerging. We're an investor in a company called Brain Trust. We invested in 2018, and they were one of the first use cases outside of the financial industry using blockchain technology, building a freelancer network using crypto economics. And I just ran into Adam yesterday here, one of the founders, and they've just been growing exponentially. And so, when freelancers can participate, when large companies can participate, more money goes into the pockets of freelancers. I mean, that's a positive use case that I can't imagine anyone would be against, any regulator or government would be against.
So jumping to my TradFi guys, I guess specifically Rishi, right? Like as companies in the world of traditional finance add crypto products, was it a big regulatory headache on your end to do that? You're integrating a crypto trading platform into your company now. Was that like, I don't know, a big regulatory headache, or is the hand-wringing on that front overblown in your opinion?
It's getting easier, I will say that. I think, crypto in a standalone world, because of the lack of regulations right now, the lack of clarity, in a standalone universe, it's actually not particularly difficult when you find the right partners. Like, we partner with FTX. Like, we haven't built our own exchanges, our own infrastructure like others. So in that sense, it's when you start bringing it into the world of TradFi as well, right? So we have a broker-dealer. We are, launching equities on. Now, FINRA gets involved, the SEC gets involved. Like, I was with my lawyers for an hour yesterday talking about, how to respond to some FINRA requests for yesterday. And so, that's, I think, where regulatory clarity of who owns the regulations, right? Like, is it right now the SEC and Gensler or CFTC? And, they're still figuring those pieces out. But ultimately, as those things get flushed out, and they will, right? Whether it happens in 6 months, 12 months, 18 months, I don't know that, but it will. I think that'll become a lot easier. There's a lot of, great infrastructure and partnerships being built, which ultimately get us back to that trust thing, right? Because to kind of, a little bit of what Jalek was saying, definitely to the UX, UI point that Slava and stuff have said here, when you can trust the system, when you don't have to worry about, managing, self-custodied wallets and losing all your, money potentially, that type of infrastructure that you can trust, whether it's the packaging, right? Whenever we get ETFs and stuff in crypto and indices and things, that all comes together, but a lot of those pieces require the regulatory frameworks to, be put in place and committed to, but it is getting easier, right? And for us, the hardest things right now, the challenging things we deal with, is I'm sure Steve is familiar, and a couple of these guys, AML, and, we have to have closed wallets because we have a broker-dealer, right? We can't just, kind of let people move their money around. And most regular users actually don't care. They don't want to.
I'd say my perspective is there's much to celebrate, right? So I've been in regulated businesses my entire career. So there's two separate things. One is like reality check, regulators are not the smartest people in the room. They never will be, because those who are ultimately generally go private, right? So it's never leading, it's always reactionary. So if you're an entrepreneur in this space, you're a participant in the space, you need to embrace the regulators that you're going to work with, and you're educating the regulators the same way you're educating your consumers. And I think that in the business world, especially in newer industries, we, as a community, don't often respect that component. We just expect them to like adopt to what we say. And they're never going to be as quick as us. And you need to deal with that and live with that, right? And so even if you think about what Yield Street did, we started 7 years ago, we were the first platform to ever digitally distribute private market investments. And I remember our first exam by the SEC, we registered with the SEC in 2015. I think less than a year later, they were in the office, which is like pretty mind-boggling if you're in a regulated business. It took about 6 months for the first exam, and the first 3.5, 4 months was pure education. So I think we've come a long way. I think there's actually much better tailwinds supporting crypto than there are in a whole lot of other much more mature areas for bringing more favorable regulation. It's a populist asset. People want it, so they're moving in the right direction. I would say it depends how you're interacting with crypto. So we don't have a trading platform, but we offer investments linked to crypto. So yesterday we announced an index in partnership with Osprey, where it's going to be a top 5 coin index. We're giving people exposure to Bitcoin, Ether, and 3 other coins, not top 10, because we think that is actually taking out too much convexity. We have a partnership with Pantera, where we've gotten access to retail investors and early stage tokens. And in the next couple of weeks, you're going to hear about a number of other pretty marquee names. And then we're launching Invest with Crypto, so you can actually transfer your crypto wallets over to Yield Street and invest, call it 50,000, 5,000, whatever your number is, into a KKR fund or a Pantera fund using crypto. We haven't had any issues there. And to be very frank, we haven't sort of shared this publicly yet, but of all the funds that we've launched, from KKR, Apollo, Fortress, Ares, every exciting fund, the crypto funds are actually selling fastest than any other product. So it's showing that the traditional investor wants that access, wants that asset, and they're taking it down quickly. It just needs to be given to them in the right frame. And I think if we don't try to do things too cute, the regulators are generally going to be okay with it if you're working within the framework of a security offering, if it is, or appropriately regulated offering.
Yeah, I mean, I think, the accredited world, though, is a little bit different than the smaller retail world, right, which is where I think there's the growth and the opportunity at much larger scale globally, not even just in the US, right?
But again, in our 40 Act fund, it's non-accredited, and I think you're seeing 40 Act, right? Like we were talking about earlier, having the right wrapper and the right infrastructure. And listen, we're not there yet. We all want the regulators to move much faster. But I think there's still a lot to celebrate over the last couple of years.
I mean, just to give some perspective.
Yeah, go ahead, Slav.
I mean, just to give some perspective, so my first company was Indiegogo, and Indiegogo has a lot of regulations to navigate, whether it was doing crowdfunding traditionally, to passing the Jobs Act with the Obama administration, to working directly with the SEC, FINRA, and Congressman McHenry, who I had on my podcast, help pass all these things. That got signed 10 years ago, and we're only now starting to see some real serious momentum in equity crowdfunding. And crypto was barely born 10 years ago, so we got to have a little bit of perspective as to how fast things are moving. So I would say things are moving very rapidly, but absolutely regulations needs to be clarified. There's a saying, which is, if you want to go fast, go alone. If you want to go far, go together. And if you want to just change that saying for regulations, like if you want to make some wealth for yourself, like go around regulations. If you actually want to make a scalable institution that's going to make tons of money for a lot of people, it's going to be regulated correctly. And there's people in the room or at this conference that are definitely made wealth, but potentially it's in a way that can't be scaled as an organization. And that's all fine and good, but I think the people on this panel are trying to create like iconic organizations that everybody in America or the world will interact with, and you can't kind of go around or hack your way to that. So a year here or a year there might feel like eternities in crypto land, but it's actually not that long in regulation, like in world time. And I would just agree for like the 97th time, for anybody who wasn't in this room, it's all about the wrappers, which is, you even said it yourself just now, which is you have a crypto fund that all of a sudden that's the number one thing that people are working with, because I would say because of your packaging, right? And that's the UI, that's the user interface experience that most people are afraid of navigating this on their own. Or if they're not afraid, they don't have the time. the energy, the minimums, the whatever. This all needs to be evolved into the way it is in the public markets, which is just a lot of great wrappers. And soon we'll be there with Bitcoin and crypto and all that stuff. And I think that is all going to be built out. And hopefully, people will no longer be trying to market to the people that like crypto. They'll be marketing to the people who have no idea about it and show where it should fit in your market allocation.
Yeah, the one thing I would say on regulation is executive order came out a month ago, right? And it basically said, hey, all these government agencies get together and figure it out. It's a step, but it clearly shows that regulation as it sits today is unclear. And unclear regulation is also one of the reasons we can't get major adoption. When the EO and everyone puts their reports in, which won't happen until November, and we'll probably even have a change in the government at some, in that election, that's going to make, then we'll start to hopefully see some change come from there.
I think your point about FOMO is a really good point, right? And Novogratz said something interesting yesterday. What do you think the total size of the crypto universe is versus total assets? It's 40 bips, right? So we're trying to attract as much regulatory horsepower as we can to pay attention to 40 bips in the market.
Yep.
And we're doing that primarily through FOMO. That's really how we've gotten this out. It's a tremendous amount of venture money, a tremendous amount of capital supporting just the ecosystem as a whole and really people. And we're trying not to pay attention to really educating around fundamentals like you were saying. And I think that when you look at it from that perspective and say, hey, it's only 40 bips of the total assets in the market, and we're trying to command 100% of the regulatory attention, it's going to be a problem.
That's it. I mean, you have to take the time. It's incumbent upon all of us in the industry, everyone here, to educate people the right way and not to just push it through FOMO. You can't. It's not going to grow to where that number that's much greater through FOMO.
I think what you'll see a lot more, and this is like, I have 3 kids, so a simple metaphor, but my kids don't always want to have their spinach, but they love it in a smoothie. My point is not everybody needs to be forced fed crypto and buying tokens like right down the front into their account in the face. Like all these wrappers are going to be created and all these smoothies are going to be available, and all of a sudden that number is going to go up from 40 bips to 11%. You'd be like, well, how did that happen? Well, just every day you got a little bit more in your smoothie, and before you know it, it's a pretty huge market. And that smoothie is, again, the 98th version of the wrapper. There just needs to be a lot of that, and that's what we see on Vincent every day. Our customers asking us for more education, simplification. We're an objective platform. We don't actually sell you a specific thing. We're just trying to show you all your options, and regularly you're trying to figure out what's my easiest way to get these exposures is the consistent feedback.
Solid conversation. We're going to have to leave it there. Lots to watch in the coming months. Join me in thanking our panel, and we will exit stage right. Thanks.
Thank you.
Hello, who likes free stuff? Anyone? Yeah? Well, did you know you can get free NFTs? I've been talking about it every single time, so if you've been here, you should know about Delta Bank and getting these cards. If you go to the expo, you can get one of these cards, scan the QR code, and you can win one of 100 NFTs. Mystical Muses and Encryptus, and one from the top female crypto artist. So definitely get one of these. Has anyone won one? Okay, well let me know if you do, because I'd love to see it. Okay, so the next panel we have is leveraging on-chain data to build trust and deliver alpha. We have Andrew Hinks, Aurelie Bartar, Esteban Castano, John Melican, and Garaj Sangha.
Well, hi, everyone, and thank you for joining us here on the Trusting Disruption stage, brought to you by Deltec. We're here for leveraging on-chain data to build trust and deliver alpha. My name is Andrew Hinkes. I'm going to be the moderator today. I'm a partner at K&L Gates based out of Miami, and I'm a professor at NYU's Business School and Law School, where I teach a class called Digital Currencies, Blockchains, and the Future of Financial Services. I'm delighted to have an amazing panel today of experts and innovators in the field of using digital asset-generated data. I'd love for everyone to take a moment to introduce themselves.
Okay, let me start. So, Aurélie Berther. So, I'm Principal Research Analyst at Nansen, which is an on-chain analytics platform. It's named after a Norwegian scientist and explorer. And what we do is explore on-chain data, label it, so kind of attribute labels, and then hopefully provides alpha to investors, filter out the noise for investment.
Hi everyone, my name is Esteban. I am the co-founder and CEO of TRM Labs. We are a blockchain intelligence firm. So what we do is analyze transactions on blockchains to detect money laundering and fraud, everything from a ransomware attack to a rug pull to an investment scheme. And we package this data, we deliver it to regulators, law enforcement, central banks, financial institutions, and cryptocurrency businesses around the world to help them build trust on their platforms and their jurisdictions.
I'm Guraj Sangha. I'm the Chief Quantitative Investment Officer of Tokenmetrics Ventures and also for Tokenmetrics. For the Tokenmetrics side, we're a crypto research platform, the leading one in the space. It's basically the crypto version of Bloomberg and legacy markets. And for our hedge fund, Tokenmetrics Ventures, I manage the quantitative investing strategies along with my partners, Ian Belina, Hugo, and Diego, who are also here. And we've got a pretty interesting hybrid structure, 70% quant trading, 30% VC. And happy to share more as we move forward about on-chain data and how we use that in our process.
John Milliken, I'm the Chief of External Affairs for Elliptic, and we're a blockchain analytics firm. We provide data on publicly available blockchains to enterprise clients, law enforcement, any consumer of blockchain data that wants to look at the data and analyze it. We provide information around the trust that's available there. So again, is it a wallet that has a history of sanctions interaction? Is it a wallet that has a history of risky interaction with the dark web? We provide analytics for traders on the type of information they'd like to look at, the flows moving between clients and wallets in the crypto space. And we're just happy to be here and talk with you.
Wonderful. So to frame out the discussion of how on-chain data can be used both to drive trust and to provide alpha, it's probably helpful for some introductory framing comments. When crypto assets first came to the fore, regulators generally considered them as wastelands and dark pools and places where there was no insight as to what was occurring on these platforms. And in fact, that couldn't be further from the truth. Blockchains are unique in that they publish information in a way that is open, transparent, and persistent. The result of this is that unlike TradFi, where there are companies that privately manage data about transactions, there's a rich forensic data set available. Now, that data set does not provide human identity necessarily to correlate with the transactions that occur. However, that doesn't stop us from using this information in ways to provide trust, to build in compliance for law enforcement purposes, and also to study this information to look for trends and create models in ways that can help to drive alpha. So this panel of experts, leaders, and innovators in the on-chain data analysis industry are here today to explain exactly how on-chain data is used to create trust and how it's used to drive alpha. So let's start with something pretty simple. What is different about the data that's created by the operation of blockchain systems from the data that we see in traditional financial transactions? Arlie?
Yeah, I mean, lots of differences. If you summarize it, there maybe 3 points. So like the first one is the granularity, the second one is the real-time characteristic of the data, and the third one is around the transparency. So I come from TradeFi, so from a hedge fund world, and actually I made the move, and for me what was really super exciting and was really like the amount of data, the granularity, so you can literally query the history from the first node on and see what the wallet has done, how it has interacted with a token, or even not a token, if it's a smart contract, what was the transaction. So that's really pretty cool. You can do a lot around that. The real-time characteristics. So like if you're in TradeFi, I don't know if anybody in this room has that experience. You need to wait for 1 week to understand if a trader has bought how many futures around the Aussie dollar or the all markets. So none of that here. You can just kind of query it, and then it's just the time of a block, and you have the data. And then on the transparency, so you can really see what wallets have done in the past. So what we do at Nansen is that we tag the quote-unquote smart wallets. So those are the guys that have made money in the past, maybe kind of minting NFTs or trading on DEXs. And then you can see, for example, one cool strategy, you can see like how much how many stablecoins they have in their wallets. And that gives you kind of an early signal for risk sentiment. So for example, if you're a portfolio manager and you're wondering, okay, when should I take profit? What are the peak and trough of the market? This is a good input. Like if kind of those investors are very, very bullish and are starting to get bearish, kind of to rise their allocation to stablecoins, we found that it's a good indicator for kind of the market turning more bearish. So yeah, that's 3 points.
Great. And Garage, did you want to make some comments about trust in this context?
Sure, absolutely. I think one of the interesting things about the volume and granularity of on-chain data is that, as Orly mentioned, not only the transparency, but the behavior that one can extract from this type of information. And in traditional legacy markets, it's very difficult. If we take, for example, yesterday's action by the Bank of Japan, in essentially indicating unlimited QE to support their bond market and the impact on the dollar-yen exchange rate was a fairly large move. We cannot, in real time, understand which players are involved and what size of positions they are actually moving in and out of. But we can, through on-chain data, we can measure wallets, as already mentioned, the flows into and out of, what other assets they're correlating with. But the additional piece of interesting information is because we have that level of insight, that level of granularity, from a due diligence and risk perspective, we can understand are these entities, for example, on the sanction list or something of that nature, are those wallets tarnished in any way or in one way, form, or another. So it provides not only interesting information, both from the granularity perspective, correlating with other pieces of data, which we use in our fund, Tokenmetrics Ventures, to generate trading strategies, but also provides us a great understanding of a much more holistic risk profile that we typically couldn't get in TradeFi.
So Esteban, maybe you can comment on some native properties of blockchains that allow us to create this sort of trust.
Yeah, happy to. There's this conception that like cryptocurrency transactions are more risky or inherently more dangerous than fiat transactions. And we at TRM think that it's actually in many ways the opposite, that the inherent properties of blockchain, what we call the T2, P3 properties, transparency, traceability, public, permanent, programmable, those properties can make crypto transactions much safer and more trusted than in the traditional financial system. So let's look at a couple. You think about the transparency. In traditional finance, the data on illicit fund flows are in siloed data centers, oftentimes offshore, where you really don't know what's going on. Here, you can actually have a visibility of the financial system per se, and measure for the first time how much volume is directly linked to illicit activity. We've assessed that it's approximately 0.17% of the total volume that's tied to illicit activity in crypto, and that's why the headlines are here. The headlines are not because there's money laundering in crypto. There's money laundering in the US dollar, of course, The headline is because for the first time we can actually measure it. That's why there's a headline. When you think about traceability, you know, if I'm a compliance officer, one of the things that I'll do as part of my anti-money laundering program is understand the source of wealth, the source of funds of my customers. And that's a very time-consuming process. It can take a long time to request bank records, to look at, you know, public registries, to really understand the source of wealth for my customers and ensure that my platform isn't being used to launder money. With tools like TRM, your exchange, your custody business, your asset issuer or NFT marketplace can actually automatically understand the source of funds of transactions coming onto your platform, and with much higher granularity, much higher accuracy, ensure that your platform isn't being used to launder proceeds of financial crime. Permanent. You know, we have members in our team who led some of the, you know, in a prior life in the public sector, they led some of the most notable cases in crypto, Silk Road, Alphabay, you know, the Bitfinex hack. That was 2016, 120,000 Bitcoin that was stolen from Bitfinex. 2022, the 2 people were arrested for allegedly laundering those funds. Interestingly, the transactions, and this is all in the public statement of facts that was released by the DOJ, the transactions that, you know, may have helped to identify those alleged launderers were from 2017. Not 2022, not 2016. So when you're laundering funds or you're committing, you know, an attack, you're hacking a smart contract, you're not just betting that the tools today will not be able to detect it. You're betting that the tools in the future will not be able to detect it. And if you're, a normal money launderer, you can always like make mistakes and, you know, learn as you go. In crypto, the mistakes that you made 5 years ago are going to catch up to you. So we have this technology, and the last one I'll talk to you is the programmability, which you could actually bake in controls into smart contracts that, you know, enable people or addresses that have, you know, DeFi passports or have, you know, past KYC checks to seamlessly interact with financial services. So we're a big believer that over the next decade, we're going to see the native properties of blockchain continue to be leveraged for good, to build more trust, build more safety, and expand access to financial services in a much more cost-effective and effective way.
Now, Esteban brought up AML, which is obviously a huge component of a regulated entity's compliance strategy. And AML presents some complex problems for crypto, but it also welcomes a host of new opportunities. John, do you want to talk about how on-chain data could potentially impact or augment an AML program?
Yeah, thank you. It's tremendous. The possibilities of being an AML officer in a space that involves assets like cryptocurrency are incredible. I've started out my life as an AML officer, first as a prosecutor doing money laundering cases at the Manhattan DA's office, and then into places like Bear Stearns, American Express, Bank of Tokyo. I've been doing money laundering cases for the last 20 years. This is possibly the worst place to launder money than you can describe. We have brilliant mathematicians, brilliant analysts, brilliant sets of computers all working diligently to analyze the data that everybody here has just described. The transparency, the openness, the ability to get that information in real time, analyze it in real time, makes it a terrible place to launder money. So for anti-money laundering, it's really a nightmare. What we've just described as the attributes of cryptocurrency make it a horrible place to launder money. At Elliptic, what we've done since 2013 was an amazing set of data, is really look and analyze this atmosphere, this new asset class, and watch every single interaction of every piece of data that flows between these wallets. And then we provide it for law enforcement, but mostly, you know, enterprise clients who need to look at scale at their wallets. They need to see what's coming and going at scale. So we're trying to add as many data sets as possible. We're analyzing new tokens, new blockchains, adding them as rapidly as possible because we know our enterprise clients are going to want to offer more tokens, more blockchains to more clients. They're going to demand that. At the same time, we understand that regulation now is not always going to be the regulation in the future. I think we were all excited about what happened with New York State DFS today, which is one of the most active AML regulators on earth. because New York State and New York City in particular sits at the financial center of traditional finance, all US dollars passing through literally lower Manhattan, they have incredible reach and power. And today they released guidance on the use of analytic tools for cryptocurrency. So their expectation is that when you are a financial institution which covers cryptocurrency exchanges, that you're going to use tools like Elliptic to analyze your data, to look for suspicious activity, to look for potentially sanctioned wallets. And you're going to look for that risk that may be intersecting with you and your clients that they expect you to protect. So it's an exciting time to be in analytics, and it's an exciting time to interact with the regulators.
So speaking of regulators and kind of harkening back to Esteban's comments a little bit ago about the use of this data for law enforcement, it seems as though we know this data is out there and it's useful and that use is developing. Garaj, do you want to comment about the use of on-chain data for law enforcement purposes, what we're seeing and what we're going to see?
Sure. There is a recent hack of the Ronin blockchain, which I think most are familiar with, where Axie Infinity resides on. And the interesting part of that is not that the hack occurred. I mean, there are hacks, particularly when bridges are involved from time to time, which is one of the vulnerabilities in the system in general. But what was interesting is the speed with which the alleged actors were identified. And the FBI released a statement indicating that it appears that there were North Korean actors, the Lazarus group, as they called it, which were involved. And effectively what they had done is moved funds from the exchange, swapped it into Ethereum, and placed it in certain wallets. They tried to move assets from those wallets through mixers such as Tornado Cash, and then, eventually into different exchanges to use as an on-ramp into fiat. They were able to identify, through on-chain analysis, the source of these assets who were involved and essentially sanction those wallets. Now, there's other parts of the process involved because these type of actors create other wallets, but once you've latched onto these certain set of wallets that are involved, the additional wallets can also be placed on sanctioned list. And this type of forensic analysis is much more difficult in traditional finance because of the nature of the movements involved, is either with the SWIFT system or other systems, and particularly when there's pure cash involved. Money laundering is a big problem. It's not so much easy to identify and TradeFi, but the native characteristics of the blockchain allow for this type of analysis and these real-time analysis, which is typically not possible in TradeFi. So I absolutely in agreement with the other panel members that it is a wonderful and positive development for the future.
So while we are seeing on-chain risks and we're seeing law enforcement acting swiftly in response to the data that's created, it's not just going to impact law enforcement and the policing of criminal actions using these assets. These sorts of activities have an impact on the value of these assets and strategies for investors. Orly, do you want to talk a little bit about how the ability to identify certain types of improper market activity can be used to drive alpha?
Yeah, so in Nansen we had the choice, and we kind of, when you have all this data, you can choose like the law enforcement path, which is really interesting and very specialized. We cater mostly to investors, but we don't have that high profile of criminals, but we also have kind of rogue traders to deal with. So like in traditional finance, for example, you can simulate a trade and then increase the volume, and then it looks like this new token like is attracting all these whales and all these smart investors. Yeah, the transparency of the blockchain also has kind of some drawbacks, but as a paradox, you can use that, use this transparency and kind of apply a layer of kind of heuristics on top of it. And for example, an example of in NFT, like there was kind of a big problem of wash trading. So it looks like the buyer and the seller are the common beneficiaries, but it looks like the kind of the volume is inflated. So what you can do, for example, with this transparency and with the heuristic, and kind of figure out, okay, look, this wallet is actually linked to this other wallet because we've clustered it and we've seen that they interact often with each other. So then you can remove and filter out the wash trading, and then you have a signal that is a little bit more informative for your trade. So yeah, so that's an example, for example, of addressing that for investment.
You make a fantastic point. What's really interesting is when you used to try to detect wash trading in the equities markets, you needed a subpoena. You needed to go to the SEC and get blue sheets and start looking at the interaction. Here, because of the public nature of it, you don't need that. You can see it yourself, and you can either take advantage of it or you can react to it. But it's a completely different world than when you had to do it in equities market.
Yeah, it's faster too.
Yeah, it's brilliant.
So with the open transparency of data that's created on chain, as we just discussed, there are new opportunities to identify certain types of abuses or criminal activities or market manipulation and so forth. But with these new technologies come new opportunities to find new and novel ways to take advantage of the markets or to act anti-competitively. And so this brings out new typologies and new areas of concern. Esteban, do you want to talk about sort of emergent areas of abuse and strategies around that?
Yeah, sure. I think broadly there's probably 3 buckets of illicit activity in crypto. There's you have cash, like fiat proceeds of financial crime that you're moving into crypto. You have crypto proceeds of financial crime. Maybe you sold stolen credit cards on the dark web, or maybe you conducted a ransomware attack, or maybe you conducted a hack. So you've got crypto proceeds that you now need to launder and get out into another currency. And then the final one is like maybe crypto native attacks. So it's not financial crime that's happening off the blockchain and being laundered with crypto. It's financial crime that's taking place on the blockchain. And we're seeing all sorts of interesting, trends. When you think about like evolution in crypto money laundering, the fastest growing typology that we see is chain hopping. So folks, moving funds across assets to evade, detection, frankly, and thankfully we have tools, cross-chain analytics that can detect, even that, and so we still can do our job. There's other typologies like programmatic money laundering, which is using software to programmatically move funds across tens of thousands of transactions. Similarly, we have software to be able to detect that. When you think about like crypto native attacks, there's we're seeing it now. We're seeing it play out very quickly. Whether that's rug pulls, a term that we used in traditional context, and now we're seeing that in crypto. I think one interesting one that we saw recently was essentially malicious smart contracts. Malware on the blockchain. You interact with the smart contract to try to mint an NFT, and in doing so, it actually swipes all of the assets from your own address. And so I think what we're going to see over the next few years is just more and more types of attacks be developed, and in turn, it's this cat and mouse game of developing the technology that can both detect and then mitigate and investigate those attacks when they occur.
So are these new emergent typologies coming from regulators who say we see this happening and so we want you to be aware of it, or is it something that service providers that are analyzing the data are able to detect on their own and sort of socialize among the community?
Yeah, I think it's a bit of both. And money laundering is not anything new. It's happening a lot outside of crypto. And you can take the typologies, that we see in the traditional world and port those over to crypto. So for instance, a common typology that you'll see in traditional finances is structuring or smurfing, where you might, let's say smurfing, you open a bunch of different bank accounts and you pay these mules to open up bank accounts for you so that you can, split your funds into smaller pieces and launder it. We see the same thing. You brought up Lazarus Group, the cyber group out of North Korea. This is something that they do quite a bit in terms of opening up lots of different accounts to launder proceeds of financial crime. So part of it is porting over what regulators, organizations like FATF at the international level, FinCEN in the U.S., Monetary Authority of Singapore, and these authorities across the world have already identified and are now happening in crypto. And then a lot of it is finding things that are novel and truly like crypto native risks.
I think the analytics, just to add to that, the analytics firms are really in a great position to work with their clients to identify these new typologies. Waiting for MAS or FCA to come up with these is going to be a little late. As everybody's, I think, agreeing, money laundering hasn't changed over the years. Chain hopping is the same thing as stealing from an American Express gift card and then using it to buy a Visa gift card. Everybody moved from payment source to payment source. The Lazarus Group originally is at least credited in some parts of the world with the hack of SWIFT and the Bangladesh bank account. They just did it over a weekend to take advantage of the fact that the New York Fed was closed, which doesn't happen on blockchain. So you're seeing more instantaneous action, and the companies that surround and support this new financial world are really coming up with these typologies as they're happening. So chain peeling technology, cross-chain analytics, all things that everybody's working on and providing to their clients as these new typologies are being invented by criminals. It is an immediate war. And ideas like stealing cryptocurrency from crypto native companies, it's unsuccessful for the most part because it's like stealing a car in long-term parking. You can take the car and move it from a spot, but if you can't get it out of the lot, if you can't get off chain, you really haven't done much except move it from one space to another. So really, the success of some of what you see in media is pretty limited. The Bitfinex people got caught laundering 0.00000% of the value that they actually stole. So I think that's why we're seeing these typologies develop and be knocked down as quickly as they can by the analytics firms and the folks on this panel.
So as I'm listening to these comments, it seems very clear that the two issues of using on-chain data to drive value for investors or for those that are interested in this area and in combating fraud and all sorts of other crime are really, they're really sort of married in the sense that there are certain actors like DeFi investors that may be managing third-party funds or might be fiduciaries or might need to have control over institutional assets who need to understand who their counterparties are. And so they need to have information to understand if they're going to deploy assets in a pool. Who else is in this pool with me? Is there 20% value coming from a recent hack? Is it 10% value that can credibly be traced to a sanctioned jurisdiction? And so companies that I've observed are interested in these opportunities, and they need these tools in order to understand how their compliance programs do or do not allow them to enter into these areas. And so I think maybe it's worth talking about how companies are using both the criminal detection tools as well as the pattern recognition and data analysis in order to drive value while also complying. Esteban, do you want to talk about, I guess, what you can call financial crime management for businesses?
Sure. So I think it really comes down to, if you're a compliance team and you're trying to manage financial crime risk, it's many of the things that you're familiar with: KYC, know your customer, customer due diligence. Of course, you're going to monitor transactions. You have record-keeping requirements. But then there's this question of like, well, what else can we do to manage risk? And leveraging on-chain data is a piece of that. So using tools like TRM or Elliptic, you can understand the source of funds for any deposit on your exchange. You can understand the ultimate destination of funds for transactions. You can understand suspicious patterns. And we're seeing people employ these best practices where they can actually configure the risk engine and tailor it to their own risk-based program. So they can say, well, in my jurisdiction, gambling is low risk, or sanctions exposure is really severe risk, or proceeds from a hack is going to be high risk, and people can kind of tune the risk engine to their own, frankly, to their own program. So that's really powerful. I think one of the really cool things is in traditional finance, it's this game of telephone where institutions have to file suspicious transaction reports and send that up to financial intelligence units or supervisory agencies in their jurisdiction. But in crypto, you actually have this shared language. You can say, hey, here's this transaction hash, and the supervisor has direct visibility. So for purposes of accountability, it's much more streamlined. For purposes of audits, it's much more streamlined because of this shared data set. One of the cool things that we're seeing is also evolution in risk management in new emerging areas like Web3 and DeFi and NFTs. We serve some of the largest DeFi protocols. We serve NFT marketplaces, and with DeFi protocols, obviously, the protocol itself may be permissionless and anyone can access, but you have interfaces that facilitate transactions that are often centralized, and those interfaces may implement controls such as sanction screening of particular crypto addresses. With the NFT, of course, you can understand the ultimate provenance, the chain of custody of the NFT, and so we're doing a lot of risk scoring for NFTs right now for marketplaces so that they can ensure that, you know, the proceeds of financial crime are not being locked into NFTs, or, you know, they're not being misused.
So Garage, is this analysis, this sort of management function, is this necessarily retrospective, or can it be used in a way that it's also prospective?
We've looked at both sides of the coin with retrospect. You're not only doing historical analysis, but also taking different points of the on-chain data chains, extracting features, and essentially doing forward analysis. In particular, we recently developed an NFT grade, which we're going to launch on our platform, which leveraged a lot of this type of data. And when we did the original testing, what we found is that with the right combination of features that we can extract from on-chain, plus understanding wallets, inflows, outflows, we can actually get a fairly good assessment of forward price action, enough so that it's investable. So certainly there's great benefits from leveraging as much of this data. I think in particular, the fact that there's great granularity, not only in the data itself, but in the linkages of the data with other sets of features, both on-chain and off-chain. It provides a much more holistic picture, not only for leveraging that type of information for investment purposes, but also for risk purposes. Esteban mentioned the great value in risk assessments, and we do that as well. So it definitely covers the entire gamut from a historical perspective to a forward perspective. But it's an avenue that we continue to explore, because what we've noticed is as much as we believe we understand, there's more and more parts of the across blockchains, the way that we can combine different sets of data that we haven't actually done yet. But as we do further work, we find it quite valuable, quite interesting. So it's definitely early days in this space.
So it seems as though this is a very powerful tool and that it's being used pretty widely. John, you want to offer up some instances or case studies where you think we've seen this type of analysis be particularly effective for law enforcement purposes?
Yeah, I think there's in the press there's a tremendous number of examples where theft or abuse of cryptocurrencies have been knocked down by the use of analytics tools. All of us have contributed a great deal towards, analyzing transactions from the pipeline hack or ransomware attack to Bitfinex. Everybody looks at these things. It's stealing in this atmosphere is so public that everybody gets to focus their collective resources on those wallets, those transaction hashes, and it's a little bit like committing a crime in the middle of a stadium. Everybody's watching, and then they're waiting for it and waiting for you to make a mistake so that they can identify it. What we've seen, and I think was a tremendous effort by the whole community, and law enforcement included, was the recent sanctions on Russia. It's a little bit State Department, a little bit law enforcement, but really the whole community coming together, quickly getting out and adding Russian wallets, adding transparency to where the Russian money was likely to go if it chose to choose cryptocurrency as an exit for the sanctions that have been predominantly levied on traditional finance institutions in Russia. So I think that's a great example of where we've really seen these tools come quickly into action and really help things. I know everybody in the panel has probably worked on it recently, but it is a great example of this new asset class reacting very quickly and working very collaboratively with law enforcement.
So we've spent a lot of time talking about crime, and we've spent a lot of time talking about using blockchain analytics for compliance purposes, but maybe we should use our final 3 minutes to think a little bit more about what sort of analysis we can do with this public data in order to drive alpha, to inform investing strategies, and to pull more value out of this. Arlie?
Okay, alpha in 3 minutes. Yeah, we can do it. So it depends on your investment strategy. So you can define it, and then you can get the data to kind of back it. Let's not talk maybe about systematic, but you can obviously do systematic strategies because you have this real-time property. If you're just a discretionary fund, let's say a liquid fund, and you want to identify the next Uniswap, you can actually tag the protocols that you're interested in, or even if you don't know it's a protocol that you're interested in, you can just kind of see, okay, oh, this entity has more and more new users, or more and more kind of users that are recurring, or actually their transactions are increasing in time. So you have the fundamental data to back that. And then maybe for macro traders, so for example, BH Digital, like Brevin Howard, is entering the field, and they're macro themes investors. You can look, for example, at indices. So we've developed NFT indices based on kind of liquid transactions. And what the interesting part is that this year, actually, the whole NFT performance was linked to social and kind of identity, whereas kind of gaming, for example, and art really underperformed. So these kind of insights are really interesting if you're a macro investor and you don't want to kind of have this or that token, but you want to build a portfolio, like your thematic portfolio. So 3 minutes or, yeah.
So we've got just about a minute left, and I wanted to give each of our panelists a moment to share a final thought or another comment that they thought might be very helpful. Let's start with John.
Final thoughts is really this asset class is going mainstream. I think everybody's been in the other panels. This is going mainstream. It's going to attract traditional finance money. Pension funds are going to come in, and this panel, this group is going to have to help everybody scale. So we're going to have to get scalable and scalable fast, and that's essentially what we've been working on at Elliptic for the last few years, is getting to scale.
Absolutely. It is, there's a wealth of information that's available on-chain. There's numerous analytical tools will need to be developed, feature analysis and correlate that across other classes with legacy and in crypto. And I think in general what we found, even at Token Metrics, is that we continue to extract additional value, sometimes value that we didn't necessarily recognize early on. But there's enormous work to do, and I think the foreseeable future will be pretty productive.
Yeah, at TRM, our mission is to build a safer financial system for billions of people. And I think fundamentally we believe, a lot of the work that people in this room are doing to create a new financial system that can expand financial services, we need to have trust and safety. If there's a latent fear of investing in a rug pull or you getting hacked and not being able to call anybody, that's going to really hamper and put a ceiling on further growth and adoption. And so we're excited to continue to work on this mission. If you're a data scientist, if you're a data engineer, if you're a software engineer, if you're passionate about this mission, we are growing very aggressively. So please reach out.
Yeah, same. We are growing, so please reach out if you're a data engineer. We are hiring at the moment. If you're an investor, please reach out also. So personally, very excited about the development around the macro parts, kind of sectors, indices, tracking different wallets. So the whole heuristics part of it and how it can make for better investment decisions.
John, Garaj, Esteban, Aurélie, thank you so much.
Thank you.
Thank you.
Okay.
It is now lunchtime. See you back here at Deltek's Trusting Disruption stage at 1:30.
Hello, everyone. The program is about to begin. Please take your seats. Please welcome Margot Avedijan.
Welcome back from lunch. That's my favorite panel. All right, I guess the pina coladas haven't hit yet. Okay, well, we have a really great panel coming up. It's called Crypto Regulation in America, and also Deltic Bank is sponsoring this stage, and you can get cards like these in the expo and potentially win an NFT and a few other prizes. Okay, on this panel, we have Henry Arslanian, Chris Giancarlo, and Mark Wiegand.
Margot, thank you very much, guys. Welcome. Guys, welcome. Hey, this is a panel after lunch, the best panel always. Today, guys, welcome being here. Today, we're going to talk about a super exciting topic of crypto regulations in the US. I promise you in 18 minutes, we're not going to be able to cover it all, but I promise you it's going to be insightful, interesting, and exciting. And to do this, we have the dream team panel with us today. I start with Mark Wiegand on the right side, who's the head of policy and regulatory strategy at FTX US. One thing you may not know about Mark, by the way, he plays the drums. So again, if you're looking at somebody playing the band tonight at the after party, Mark is here. And of course, on my right, I don't think you need any introductions, Chris, but Chris Giancarlo, former CFTC chairman, as well as the executive chairman of the Digital Dollar Foundation. And by the way, if you think regulators are boring, he plays also the banjo. So I think they have a band going on here from that perspective. Guys, thank you very much for being with us today. Let's dive right in. The panic is about crypto regulations in the US. I'm sure people are in the room and those watching from online by streaming. If you had to rate the state of crypto regulations in the US from 1 to 10, 10 being excellent, 1 being crappy, where do you think we are? Chris, I'll start from you.
I would say 0. And I mean no disrespect to the regulators, but these were regulations written 90 years ago, in the 1930s. I mean, our regulatory framework it's just not fit for purpose for an entirely new architecture of finance, which is what crypto is. So I'd almost say non-applicable is probably the right answer.
Wow, did that make sense? So 0, this is going to go on Twitter today. Chris Giancarlo says it's 0 on 10. Mark, what do you think? What's your score?
Well, I'm going to take a slightly more nuanced view in the sense that I actually think with a couple of different agencies, one in particular, which is the one where Chris and I used to serve, there's actually a fair amount of flexibility in how the regulations are written. And maybe later in the panel we'll talk a little bit more about some of the specific things that FTX is doing. But the truth is that a lot of the U.S. regulatory agencies actually have a fair number of authorities to massage the rules and figure out how to slot products into the regime or slot business models into the regime. And so what we really need to see, I think, is more entrepreneurialism and aggressiveness on the part of the staff at the agencies. And I think they're trying as hard as they can, but it really takes some leadership at the top and some leadership that understands we're in a really critical moment for the industry. And it's an industry that has a lot of benefits for the U.S. economy. We saw at least a recognition of that pretty recently in the executive order that the Biden administration released. And so that's what I would like to see. I would like to see a more aggressive embrace of the industry and more aggressive use of the tools to try to permit some of these products.
If you had to put a grade from 0 to 10.
Well, as the former chairman here said, there are some limits and restrictions, to be fair, that make it harder to give an absolute 10 of a grade, but I'd probably assign a grade overall of maybe a 4 to 5.
4 to 5, 0. You heard it today on the Trusting Disruption stage by Deltec today. Actually, but who's going to be the competitor? Let me say, Mark, from your perspective, who do you think is the biggest competitor to the U.S. when it comes to crypto regulatory clarity? I mean, you guys are here in the Bahamas. Can the Bahamas be that?
Well, I was going to say, the Bahamas has an amazing regime, and they have a very flexible regime, but a serious regime. And I would say, be interested to hear Chris's views on this too, but the one thing that the international regulators probably care the most about right now is AML KYC compliance.
Yep.
And the Bahamas jurisdiction is a jurisdiction that's a member of the FATFA community, so it has very strong standards. And that's sort of baseline table stakes as far as what a jurisdiction needs to have credibility. And then above and beyond that, we have a very flexible regime here in the Bahamas that permits this industry to flourish.
Chris, what do you think? I mean, who should we be worried about from a U.S. perspective?
Well, I think we need to worry about ourselves. And the reason why I say that is I think actually the biggest competitor to a competitive multiplicity of cryptos is a unitary approach run by central banks where they say the only standard will be one we create. And that's in fact what you have in China right now. With the emergence of its digital yuan, its ECNY, in order to prevent competition, they've banned competing non-sovereign cryptos. If you read the utterances out of the European Central Bank, there is nothing but FUD toward non-sovereign crypto, and there's nothing about, except for positive statements about the likelihood of a digital euro. In my recently published book, I talk about the best outcome for a free society is choice, competition between non-sovereign and sovereign money. My worry is, if looking at China and Europe, the trend seems to be that the central bank and the central state's response to the rise of crypto is to usurp it and say, well, we'll roll out the crypto, it'll be a digital currency, and we'll then bar competition to it. So I think the worry in free societies is that we follow the Chinese model, as opposed to what got us here, which is the model of competition, of choice. And I think the best protection of individual liberty is choice of digital currency between sovereign and non-sovereign.
We're talking about that. I mean, not to jump right in, but I mean, you've been very involved with the Digital Dollar Initiative, right?
Yep.
That's a great example of a private sector-led initiative. What's your view on that? You think that's the way we should go with it from a U.S. perspective?
Yeah, so thank you for that. So when I left the CFTC, I launched the Digital Dollar Foundation, a privately funded foundation to further education and exploration of a digital dollar. And then we formed the Digital Dollar Project to launch 9 pilot projects looking at the use of a central bank digital currency, everything from retail use to wholesale use. And one of our foundational principles is a simple one, and that is money is as much a social construct as it is a government construct. And in my book, I actually say money's too important to be left to central bankers. The private sector must be involved. In fact, the private sector has been leading the way in exploring money for the last 14 years. Now central banks are waking up to that and are responding with their own central bank digital currency. Every major central bank in the world is today experimenting with a form of central bank digital currency. And in China, over 100 million Chinese are now using the Chinese central bank digital currency. So central bank digital currency is coming. The question is, in free societies, what is it going to look like? And we launched the Digital Dollar Project to assert the role of the private sector in helping to shape what the central bank digital currency of the future looks like.
That's going to be interesting. I think that's a very unique feature that we have from that perspective, right? But let's bring it back to the actually securities regulators, let's say, or derivatives regulators. For I think many of us who have been in the crypto community for a long time, there was always this confrontational approach between the community, the crypto community, and regulators. Do you think that was a mistake, Mark? Or do you think we should be kumbaya, and be a bit more closely together, working with the regulators on that perspective? And share your experience on that side as well.
Yeah, well, first of all, I would say, by and large, my experience, even looking back at my time when I was in the official sector, when I was interfacing with the industry at that time, it was always very positive. Occasionally, you might have an incident here or there, but generally speaking, I think people came in and were trying to push and innovate on the product front, wanted to do it in a way that was compliant and consistent with the rules, and were fairly honest in their approach, and they were very clearly looking for guidance. And I think by and large, that's what you continue to see. I think that any constructive process is one where people are willing to learn from the other side and are willing to give a little bit. And I think it's a very, very similar process when you talk about licensing and registration and even policy making, which leads to licensing.
But do you think regulators have done a good job in marketing themselves? How the licensing works and how open they are to attracting crypto firms?
Here's how I would answer that. I think that, at least looking at the U.S. agencies, the regulatory agencies, I think there's always been intrigue, and there has been for quite some time since the industry really started to develop many, many years ago. In fact, when Chris and I were serving there together. But I think there's been a slowness in understanding the real opportunity and leaning into it and really doing something about it to seize it and recognizing some of these other bigger principles and mandates that all these individual agencies have, but are sometimes lost on the staff when they go through the day-to-day operations of their jobs. And let me give you a couple examples. The CFTC, the Commodity Exchange Act, is a body of legislation that created the CFTC, the Commodity Futures Trading Commission.
Yeah.
And one of the specific mandates is to promote responsible innovation.
Yep.
And another one is to promote competition. So that's written right in the statute. The agency has to follow those principles. And so those principles need to be top of mind, especially now, given where we are with this industry, given the potential importance of it for the U.S. and U.S. interests. That should be top of mind among all the people that are working in these agencies right now.
That's very interesting. And Chris, on your side, obviously we're in the Bahamas now. It's a success story, right? I mean, the regulator has done a great job creating a framework that the crypto industry is happy to embrace and work with, right? I think kudos to the regulators here as well. When you look at, let's say, not the CFTC, not to pick on your old organization, but do you think they've done a good job in coming up with the frameworks in the framework they have and how they're marketing it and how they're actually sharing with the broader audience?
So yes and no. So yes.
At least it's not zero this time.
Look, the CFTC was the first agency in the world, the first regulator in the world, to greenlight a regulated crypto product in the case of Bitcoin futures in 2017 during my administration. It happened nowhere else. So in some ways, we've been leading in the United States. As Mark says, we need to continue to lead. But here's the no part of my answer. And it's really a deeper analysis. We find ourselves in a total revolution of the recording of the ownership and transfer of value, a revolution in the architecture, an internet-based architecture, as opposed to a proprietary architecture. And this revolution is taking place against a very challenging backdrop, a backdrop of septuagenarian leadership in the United States now for 2 terms. And it's not just in the White House, it's throughout the government. And we all know there's a huge generation gap in crypto.
Yep.
So I'm not criticizing septuagenarian government, but it's particularly problematic at a time when we have this revolution going on. Secondly, we have a central bank-dominated government. We don't just have a chairman of the Federal Reserve, we have a former chairman of the Federal Reserve who is our Treasury Secretary. And central banks play an inordinate role in our modern economy. And then the third point I would make is that, and really deeply underlying this new revolution, is after 30 years of globalization, there's really a questioning of whether the free market is the best allocator of capital and financial services, or whether there should be a political component of that. And we see that increasingly in the conversation about financial inclusion and others, whether the free market has not been sufficient and whether there needs to be a political calculus, a legislative calculus, and how financial services are allocated. And that really divides, I think, both wings of the party. And again, it's not political. Donald Trump was as willing to allocate resources as is the current administration. And so with these fundamental underpinnings, I find this new crypto revolution is really facing some real headwinds simply because the receptivity that has been there at other points in our history for financial innovation is not there as much. There's a lot of questioning. And so that's something that I think is going to play out over the next few cycles of Congress. It's going to play out with this administration, next administration. And I think it's got to play out before this innovation gets the embrace that ultimately I believe it will, because I'm speaking for the United States, but the West generally, we've generally embraced innovation in the long term. We're aspirational societies. By the way, you can't stop technology. And this technology is not going to be stopped by central bankers or septuagenarians or deep-seated political differences. It's going to happen, but it's facing a challenge right now.
You still believe, I think everybody in the crypto community remembers when you got the Crypto Dad nickname a couple of years ago. And I know because I quote you in my upcoming book that's coming out in a couple of weeks, where you say, and I quote, we owe it to the next generation to actually listen to them. And I think you said the story how you went on a ski trip and your kids were talking about it. Do you think that's even more true now than it was?
Oh, absolutely. Look, I grew up in a generation where we had summer jobs and we immediately had to have bank accounts because we had to cash our checks. So our first institutional relationship out of high school was a bank. For my kids in their 20s, they had relationships with social media providers, with online gaming play games, with mobile providers, with online retailers, with social media companies, long before they set foot in a branch bank. My kids have been trading tokens since they were 13. Take them into a branch bank and they look around and say, what is this place? So to tell them that somehow, writing checks is cool, the existing banking system is cool, and crypto is dangerous, I mean, they view it the opposite way. They don't trust banking institutions. They intuitively trust online commerce 24/7, 365. And so if life is a conveyor belt, which it is, they're moving up the conveyor belt. They are, these septuagenarians are going to give way to the next generation that intuitively gets this new architecture. So it's coming. There's no question it's coming. It's just in the short term, I think it's being held back by that central bank mindset, that banking mindset. So it's going to come, but it's going to come in fits and starts.
But Mark, is that something you feel as well? I mean, I know you guys are applying with the CFTC right now for a specific license. I mean, is that feeling you guys get as well as an exchange?
Yes.
Talk about your application as well. I think it's interesting for the audience to know.
Yeah, no, certainly to some extent. And I guess another way to respond to the question is referring back to something that I said before. This is an opportunity. The FTX application before the CFTC is an opportunity for the agency to do something innovative for itself and to do something to really make an even bigger impact and a greater mark on this industry globally than it has already. As Chris said, the CFTC already has a very, very strong history in terms of its forward-leaning nature when it comes to this space. But this is an amazing opportunity, we think, because we've provided something to the agency that explains how we can innovate on the risk modeling front, on the market structure front, and do that in a way that's consistent with the regulations. We're not asking for any special treatment, nothing of the sort. This is a model that can fit within the regime, and it is a risk model in particular, different component parts to what we've put before the agency, but one of them is the risk model. That's a real-time risk model, which is not something that's typically seen in the traditional exchanges in the United States. And meanwhile, there are issues around settlement risk and the duration of risk between the point of execution and the settlement of a trade. That is something that's been considered and debated since Chris and I were serving years and years ago. And so again, the way we look at this is we've provided the agency and the marketplace an opportunity, and all the agency has to do is to say yes, so long as we make the appropriate showing as to how we comply with the regulations, which we
If you have a couple seconds on that, let's 20 seconds on that.
So, you know, as a former chairman of the agency, I haven't commented on the FTX application, but I'd actually like to make three observations here and now. The first is that the intermediated model has historically served the United States well in areas of ags and in financial products. Having said that, it's a uniquely American model. It's not the model that's used around the rest of the world. And the third point is, crypto has emerged around the world without an intermediated model. So for the CFTC to now come in and say it must be intermediated because that's how we do things in the US, is to actually impose an element on this emerging market that the market itself hasn't put in place. In other words, there hasn't been this organic demand for it. So what I would say is, were I chair, and I'm not, but if this application were before me in chair, I would say, let's experiment with it, as we did in so many other things. Let's let it play out. Let's see how the FTX model works. Let's see the intermediated model that other competitors are doing. And let's let them play out side by side. And let's let the market determine where the market demand is. And at the same time, let's study it carefully. Let's look at how the margin model operates during periods of stress, the different ones, and let's compare. Let's use this as an economic opportunity, as Mark says, an opportunity to explore this economically without choosing one or the other. Let's let the market make the decision, and let's gather the data, and let's publish the data, and let's make a database decision as we gather experience with it.
Well, people at the commission are listening to this.
Well, I need to make one important point of clarification, which is what we're offering and what the application reflects is the option to participants to come to the platform without any intermediary involved. But that's an option. In other words, if brokers or intermediaries want to come to the platform and bring their own customers, that's also permitted and contemplated under our application. So it's really more of an issue around choice than anything else.
So talking about choice, we have 30 seconds left. You have no choice, but my bell is back. And we're going to do quick fire round questions. I need 1 or 2 word answers as we finish off the panel. Are you guys ready?
Yeah, let's do it.
There's a lot of students today. What if you can recommend the students in the room, there's one course they need to take, what would be that course they need to take? Chris, we'll start with you.
Accounting.
Accounting. Mark?
Economics.
Economics, interesting. There you go. The economists in the room are happy from that. You both are lawyers, including me, by the way. If today you had to go back to university, would you go back to law school? Chris?
Absolutely.
Convinced. Mark? Mark, we'll start from you on this one. When you're not FTX driving policy, what do you do on weekends?
I play music and try and ride my bike.
Here we go. Chris?
I'm performing this Saturday night, the 76 House to Pad, New York, the Crypto Kings Band.
My God, Crypto Kings. Here we go. Okay, one book or resource you recommend anybody in crypto to read? Chris?
Crypto Dad, The Fight for the Future of Money.
Very objective there, very objective. Mark?
The Ascent of Money.
The Ascent of Money, very good book actually. Okay, and the last question to finish it off on today on Crypto Bahamas and the Disrupting Trusting Innovation panel. If you could have dinner or lunch with one person, dead or alive, lunch or dinner with one person, dead or alive, who would it be? Mark, we're starting from you.
Well, I met her last night, so she's top of mind, Katy Perry.
Hey, Chris, to finish the Trust and Disruption panel today on Deltec.
Teddy Roosevelt.
Teddy Roosevelt, here we go.
Hero of mine.
Guys, thank you very much for being with us. That's all the time we have. See you guys later this afternoon. Thank you.
What a lively regulation panel. Usually they put me to sleep. So the Deltec is the sponsor of this stage, and they've worked a lot with regulators. They're actually the first bank to bank crypto companies. So we actually are going to see a lot more innovation from them as well. And you can pick up one of these cards in the expo, and you can win free NFTs. So the next panel that we have is Art, Culture, and Community in Web3. We have John Caldwell, Melissa Alcina, Justin Aversano, Nicole Buffett, and William Tong.
See, there's not many people here.
Go ahead.
Sorry.
All right, hello everybody. John Caldwell. I run the non-fungible fund at Wave Financial. We're the first SEC regulated NFT fund. So we invest in actual NFTs, NFT protocols, things like that. And I've brought together some of my friends, people I've worked with, people I've surfed with, people I've collected their artwork, people I go to parties with or wait in line at parties with. So here we all are, and I guess I'll start. I'm going to start at the end over there. This is a great man. His name is William Tong. He works with the Origin Protocol. William is one of the most connected people in the NFT space, and I'm just happy to have him here. So do you want to give an intro on what you do?
I'm super grateful to be here, very, very honored, especially on this stage with such amazing, amazing people in the NFT and Web3 space, people that have literally defined the way that I live my life and the way that I move, operate, and support communities. As we see now, Web3 is disrupting or changing or innovating in the Web2 and the prior spaces more now than ever before. It's just incredible to have these spirits and this energy with me in this space. At Origin Protocol, we're always trying to make sure that we're supporting creators and creatives by helping them create NFTs and take their art onto the blockchain via story.xyz. And also Lucky Ducky, just claymation ducks that make you happy.
Yeah, we love the Lucky Duckies. I guess, Melissa, do you want to go next? So this is Melissa. She's a local Bahamian artist. She just had her first NFT drop today. It sold out in 12 minutes. It's a really big, exciting day. She dropped it on Quantum, which I'll get to later. But Melissa, do you just want to say hello and talk about what you did today?
Hi, everyone. I'm Melissa. I'm a Bahamian artist here. And yeah, I did just have my first NFT drop, which was wild, especially that it sold out so fast. I'm really, really new to this entire kind of world. So I'm really looking forward to being a part of this discussion and some of the other events so that I can kind of soak everything up. Yeah, and I'm just happy to be here.
Cool, yeah, we're happy to have you. We have Nicole Buffett. She's also an artist that sort of has bridged from traditional art into NFT art. So she has a really interesting perspective on that. And yeah, why don't you talk about what you've been working on?
Hi, thanks so much for having me. Yeah, I am a traditional painter who came into this space about a year and a half ago, and it has completely expanded my work. The digital medium has allowed me to express and communicate ideas that I've always really wanted to. Let's see, I'm working on so many different things. I'm about to be a quantum artist as well and drop my first hand-painted animation series in July. I'm also just really excited about how this space has transformed the role of the artist in the world and really allowed the financial community, the technology community, and the artist community to come together and work as a unit and truly, as William was saying, bring about incredible change.
Yeah, great. And then, of course, we have Justin Aversano here, my good friend. And I met Justin in the Punks chat room, Larva Labs, on Discord. And he was like, hey, do you surf? And I was like, yeah. He's like, do you live in LA? I was like, yeah. He's like, let's go meet at Topanga in an hour. And I was like, all right. So I went to Topanga, met him there. And he's like, dude, you got to buy a photo NFT of mine. And I had never heard of him. And I was like, $12,000 for a photo from a random person I've never met is a lot. But that was a twin flame, and those are now worth, what's the floor on twin flames?
222
ETH. So that's a lot. 600, 700K, something. Anyway,
Justin is a close friend, and he's an artist, sort of turned CEO. So his journey is very interesting. Why don't you talk about maybe twin flames and quantum a little bit?
Sure, thanks, John. I'm grateful to be here with everyone on this panel. John, our fellow artist, and Will. I started this journey a year ago in February with Twin Flames, which is a photography project I've been working on since 2017. And I found myself in the Punks chat where I actually found a community that actually cared about artists and were interested into supporting art. And from there is where I met John and found myself in this journey. And I had some success with my art that I've been working on my whole life. And with that success, I built a company called Quantum with some co-founders of mine, Jonas, Alex, Chris Graves. And we are here to uplift and serve the community by bringing on artists who've never been in the space before and hopefully changing their lives for the better and giving them a place to be in the world, because art is a job and it's extremely important for culture and people to understand that artists are here to help heal the world. And so Quantum is our company. It's called Quantum Art. It's an NFT platform. We started with photography because I'm a photographer, and now we're branching into digital art and fashion and metaverse gamification. So in a way, it's like this whole journey is unraveling every step of the way. Everyone we meet and every conference we go to, we just continue building this journey to hopefully do something positive in the world and not create a dystopian future, but a way where we can, uplift everybody and give access to crypto and wealth to everyone in the world, because I think that's extremely important.
Yeah, that is. I was just checking my notes here for the title of the thing. So it's Art, Culture, and Community in Web3. And we are on the Trusting Disruption stage, sponsored by Deltec. So thank you. I mean, I like what Justin was saying about disruption. I think that it's interesting to be at this like traditional finance sort of conference, but also be trying to disrupt. And I think that this conference is actually really interesting that you have, a crypto company like FTX that is disrupting the entire industry. And it's sort of a microcosm for what's going on across every vertical. So like art, fashion, community, social, like everything is slowly being disrupted by Web3 technology. And I guess that's where I'd like to start with you guys is like, there's this meme going around that's just like, oh, we are so early. And I want to, talk about that because there's 1.5 million people have ever done an NFT trade ever on OpenSea. So 1.5 million. There's 90 million crypto users on Earth. And there's around 8 billion people on Earth. So in terms of those stats, if you are trading NFTs, if you're buying NFTs, selling NFTs, you are early. But I want to talk about that because other people who are really in the space are also like, how could Bored Apes be worth 150 ETH? How could this be happening? Are we still early, or are we at the top of a bubble? So I just wanted to sort of open that up to people, like talk about their friends, what happens when you talk about NFTs to people who aren't in NFTs. If we're talking here to the audience, it was supposed to be at 2:10, by the way, and then they changed it to an earlier time, so not a lot of our friends are here. But yeah, we don't know, like, I mean, William, what do you think? I mean, you go around, you talk to like a lot of Web3 people, but a lot of Web2 people as well. I mean, are we early?
We're definitely early because there's always things that are coming along all the time that can change the way things are done. I remember gratefully meeting Justin and Nicole in Santa Monica over lunch, and then Justin's like, hey, definitely pick up one of my pieces. I looked at it. I thought it was really cool. At the time, there were only 10 Ethereum. And at the time, I didn't have 10 Ethereum. So I told my friends, hey, we should probably buy this. But then they didn't understand enough yet about NFTs, and they didn't jump in. So as we're seeing more projects come out now, there's still ways you can educate yourself on the NFT projects, artists, the different things that are coming out, and still be able to get in early enough before maybe some of your friends. A great example most recently would be Moonbirds. Moonbirds only came out like a month ago, and since then, the project has done really, really well. So as long as you guys educate yourselves, you guys really learn about artists and what they're about, the history, then I think you can be really, really successful in this space.
And on that note, like for me, for example, hanging around a lot of crypto people who got in 2012, 2016 with Bitcoin and other coins, I feel like I'm late to something because they're all early and they're all billionaires now. And it's like, how do you become early in a place like this? And if it's NFTs, maybe we are, even though it was invented in 2017 or so. And maybe because we're so involved, it doesn't feel early, but for people who are yet to be onboarded, and maybe it's through, mass media or Fortune 500 companies, that they will bring in all these people. But again, I think, how do we give crypto access to people who can't afford it or don't understand it? And I think there's an education on board that needs to happen. If 8 billion people in the world will have ETH or Bitcoin or some other coin that comes along at some point. So it's easy to say we're early. It's also easy to say we're late. It's just a matter of being present with this technology. At the end of the day, it is a technology. It's also a financial instrument. But we, as artists, see the technology and how to utilize it to create new, innovative things.
Right. I mean, the goal is 8 billion people will hold ApeCoin, right? Like within the next couple years. Just kidding. Melissa, like what's been your reaction from people when you tell them you're doing an NFT drop? Like your local friends, family, stuff like that?
I feel like everyone kind of expected me to get into it as well, and I honestly had no idea how do you NFT, Like, what am I supposed to do? When I found out about it was through like mass media, and it was like a year or so ago. And I was like, oh my gosh, these people are becoming like millionaires. How do they even navigate that space? And when I tell my friends, yeah, like I'm a part of an NFT drop, they're like, wow, that's awesome. But there's kind of like this silence that goes with it because nobody really knows what that means. And I myself am definitely one of those people. So honestly, if I didn't get the opportunity to team up with you guys, I would have never really felt like I had access to that space, because it's easy to like try to educate yourself online, but it still feels so foreign. Like you need an in somehow, it feels like.
Yeah.
Yeah.
And that's kind of what Quantum does. I mean, Quantum, that's Justin's company. It sort of sits in the middle of like retail adoption. So they have retail spaces like on the 3rd Street Promenade in Santa Monica, where people can come in, buy an NFT who have never bought an NFT before, get an avatar of themselves. But then they also sit between onboarding artists. So an artist like you who doesn't know how to do smart contracts or doesn't know exactly the specifications, their dev team sort of holds your hand as you go through that process and strategizes like how much money you should drop, how many you should do. So yeah, Justin, like as you're doing that, what type of artists are you looking for? Like what's your criteria to bring people into this space?
Well, we have a team of curators who are like museum associates and have worked at museums pretty much their whole lives and have book publishing companies. So we have a critical eye on the art we curate. And also, it's not about just beautiful art, it's also about inclusivity and diversity, which is always an important factor to create social equity, which is one of our, most important roles in this space, because it's easy to be just giving it to all the men, because last year, 95% of all sales were of men. So we started Quantum knowing that we want more than 50% to be women and people of color and indigenous, LGBTQT, everyone that matters and helps push culture forward and create a difference in the world of the art.
Yeah. Again, going back to the disruption, we do want to disrupt traditional colonial models, financial oppressive models, and I do think Web3 is a tool to do that. I think in particular Ethereum and like Vitalik's vision with this stuff was to disrupt a lot of these systems. So we're all trying. I mean, I don't know what your guys' experience is with trying to bring good about in this world. I was able to help with Ukraine DAO. We raised $7 million by sort of fractionalizing the Ukrainian flag, right when they were invaded by Russia, and within a few days we had the support from so many people. They put in $7 million, and we were able to like deploy that to people in Ukraine like within a few days. And that to me was the first time I really saw how quickly and just frictionlessly you can use these Web3 tools. And I didn't have to write a single line of code. You know, everything was there. There's these building blocks of like party bid and fractionalization and Zora, and you just put them all together, and then people can interact like immediately.
Nicole too also has worked on important conservation projects, so I'd love for her to share.
Yeah.
Yeah, I think my most exciting project to date is the dolphin commemorative NFT. It was a painting that I made in memory of a friend's husband who had passed away, who loved dolphins. I had made it years before the NFT space began. And she called me up right away when things started happening. She actually worked for a hologram company called Portal, and now called Proto Hologram. And she said, I'd love to, turn this painting into A, a hologram, and B, I would love to help dolphins with this piece in memory of my husband. Do you want to do this? I said, yes, absolutely. That sounds amazing. So that's what we did. First, it became a hologram, which was incredible enough just to see it floating. And then we got together with the Open Earth Foundation and created a whole program called the Ocean Drop. They had done the carbon drop previous year with people and raised a bunch of money for that. And actually, John was one of the first people to bid on that piece. It was an auction, and we raised a good amount of money that protected the dolphins off the Cocos Islands. And I just love that. I think that the capacity for the individual artist to impact causes that we feel passionate about, for me, it's always the earth first. I think that we all have such power to do that. And even if each of us just allocates a little bit of what we're making in this infinitely abundant new world that we're creating, we can have an infinite amount of impact and preserve the joy and love that's being generated here.
Yeah. William, weren't you working on something like with like ocean preservation as well?
I'm always working on a bunch of different things because there's so many amazing people on this planet that are trying to do good. One thing that's I'm working on very recently is there are these amazing people. They created a project called Ocean Defenders. And for them, off the coast of Hawaii, a lot of people may not know, but actually governments have dumped munitions right outside of the Hawaiian Islands. And they're still there. They're unfortunately leaking into the oceans, damaging sea life, damaging human health, damaging all sorts of different things, especially the coral. So the idea is to be able to sell NFTs, to be able to raise money, and then actually have a guy who goes into the ocean, he finds these bombs, and then he brings them out of the ocean so they're no longer poisoning the earth as we know it. So for us today, for the people in this room, if there's a mission or a cause or something you're passionate about, you have the power now to activate it and to do something amazing, something that before may have taken years or may not have been possible. But because of the technology of the blockchain, of Web3, of the people on the stage and community and the network that we have, you can achieve things that before may never have been possible. So to be able to do something to really save the planet, save Earth, help Ukraine, help artists, it's something that's very beautiful to me, and I'm grateful for this technology.
Thanks.
I also think, we have a chance right now, and if we want to talk about disruption, we really have to look at the model of, let's say, Web 2 of finance, traditional finance, and Web 3 of crypto, and how do we not make the same mistakes with all this abundance of wealth that's generated through yielding or coins or inflation, all these things? How do we not make the same mistakes, and how do we utilize this new energy to precedent ourselves to actually heal the world and do ocean conservatory and animal, saving? How do we make sure we don't make the same mistakes? And we got to ask that question to ourselves: is the things we're putting money towards, are we doing the right thing? And how do we do the right thing? And I think these are important topics to discuss when we're working in a whole new disruption of finance. And how do we use that money for good and not to continue polluting the earth? So that's a question for you guys to think about.
Yeah, it is interesting. I think with NFTs, there is like this undertone of the artist sort of vision. And so there is a guiding moral principle through like just that creative spirit. And I think that combining that with financial tools is really interesting. A lot of NFTs and NFT culture is just about maximizing value, you know, and being exploitive. But I think a lot of people are also in an abundance mentality. It's not competitive. It's not like, oh, I need to get this, and if you get it, like, it's bad. There's the slogan, WGMI, which is kind of cheesy, but it means we're going to make it. And it's very inclusive. It's like every single person I've ever interacted with in the NFT space, it's abundance. It's like you provide value, not because you're going to get value back, but you just provide value. You want to see your friends make it. You want to see everybody get into this space. And I think everybody on this stage has been like so good at that. And I don't see that in other industries, whether it's like Hollywood or maybe traditional finance. It's like people are cagey about their connections and they want to use their connections for maximizing their value. But you know, if I go out and I meet people, Justin will be like, whoever he's talking to, oh, this is John, you should meet him, he's awesome. Or William, or, you know, and we all do that with each other. And here we are, kind of a year out of, maybe a year and a half out of like the depth of like lockdown and COVID and Clubhouse and when NFTs were emerging. And here we all are, you know, the WGMI prophecy came true. So, yeah, I guess I also want to touch on some of the latest things in the industry. We did have this kind of new collection come out of nowhere recently called Moonbirds. And that is like a Kevin Rose. He was like a Web 2 person. Everybody believes in him as an investor, as a brand builder. And he created this project that a month ago I had no idea what it was. I saw Justin wearing an owl hat, and I was like, what is that? And a month later, it set records. The first day of sales, it did about 10% of the volume of Bored Apes that Bored Apes did in a year. I mean, just crushing volume records. And so as we get into these new collections, these people promoting these new collections, like, what do you guys think that looks like as bigger companies or people with more experience in Web 2 and brand building come into the space? I mean, William, you kind of deal with that with Origin a bit, right? Like you're bringing in brands, artists, things like that into your protocol.
It's like when we have a lot of brands or a lot of artists come to us for the first time saying they want to create an NFT, one of the first questions we ask is why? Why are you creating an NFT? If it's just for the money, if it's just for commercial purposes, most likely the project won't be successful because that doesn't tie in with the culture of Web3, which is a very collaborative, authentic, sincere environment where we're trying to succeed not in terms of economics, although that does happen, but also in terms of community building, in terms of making sure that our people are taken care of, and that we're building a solid financial foundation. So most recently, gratefully thanks to Rembrandt A. Thomas, I get introduced to McLaren Automotive. So now McLaren Automotive, one of the most iconic historic brands in the automotive space, they want to release an NFT collection. So for us, it's to talk to them, you know, what does McLaren really mean as a brand? What does it mean authentically? What are you trying to communicate to your community? And who are you trying to bring into your community? So for us, as all of the people are here in this room, if you're thinking about participating in projects, how do you create something that's really authentic, that really adds value to a space? Not just to the spaces that you're in currently, but also to the Web3 space and to new communities. Because ultimately, that's how you're going to grow what it is that you're trying to do. That's how you're going to make sure the project is successful. And that's how you're going to get the real network and amplification effects of Web3.
How do you think we scale? Like, because a lot of the communities right now, they're in the like 10K, 20K. Nothing's really quite bigger than that. Like, how do we scale to larger audiences as we, you know, as founders or as community builders, as artists who are trying to expand and bring utility to our community? How do you think we do that? Is it through celebrity endorsements? Is it through brand, you know, bringing in brands? What do you guys think? Maybe we could ask Julia too.
Yes to all the above. I kind of am going to touch on that question and then the other question of like, are we first? Are we, you know, are we still in that zone? And I think that, you know, there's a constant state of innovation happening and that there's a limitlessness to what this technology gives us a capacity to do. So the question is, what do you want to have happen? It's really an amazing opportunity to consider to what extent will my imagination go? You know, what really is my vision? So it will meet you there. You know, this place meets you where you meet it. So I think that if you can imagine how you can scale, then you will find the way to do it. You will find that way, and there's many different channels. And I think the key is really being true to yourself and working with people that you feel aligned with and a kinship with.
Justin, what are you doing for Quantum? How are you building your community? I mean, you've done it pretty organically, like from your Discord. I met a lot of people in there, like Twin Flames collectors. That's like 100 people, up to, you know, a couple thousand, up to what, like Quantum. Like, what's your plan with that?
Well, first and foremost, I believe in the artists, and I feel like the artist is what truly makes Quantum successful. Like, without the artists, we're pretty much nothing. So it really is down to the artists and how we grow through their work and who we're inspiring and whose lives we're touching. And, you know, all these different factors and variables that grow communities is simply through the art and through our leadership. And I think the trust in the trustless nature of the blockchain is really what gravitates people towards Quantum in the first place. And I don't think people would want to be working with us if we weren't doing the right thing. And I believe in doing the right thing for the artists first, because we have to protect them. Our whole, you know, generation of being an artist, we've always been exploited by companies. We've always got the short end of the stick. So now we finally have a place to take care of not only ourselves, but the community of artists, and forever through the royalties factor of NFTs and the smart contract. So I believe the artist always leads the way, and without them, we're pretty much in a bad place to be.
And just, I guess I always like to do this, just quick show of hands. How many of you have bought an NFT before? All right. And then how many of you have sold an NFT before? That's pretty good. You guys are like active NFT traders out there. That's nice. It's always hard to sell, because you sell and then you're like, oh, the number kept going up. We all have our horror stories. I sold Bored Apes very early. Talking to William, he sold his ape coin a bit early. Like, we all are, you know, forged in the fire of FOMO. But I think that's like, it's tough. It is very high risk. It feels kind of like gambling at times, even with the most like well thought out investment thesis or strategy. There's still a lot of risk involved with this stuff. So as we onboard people, there's a bit of a duty to warn them of that, or tell them, you know, because people come in and they get wrecked and then they never want to come back. So it's tough. And I don't really know the answer to that. Like, it's a tough one.
I think the answer is be creative, be the artist you are in your heart, and you don't think about trading when you could be creating. Like, all of us here are artists, and, you know, I haven't made my wealth flipping apes or punks. Like, I'm a paper hand, so I always lose profit. So being an artist, I'm able to generate wealth through my creativity out of the ethereal plane, which is great why it's called Ethereum. But in a way, like, it really gives us power, and power back to the creator when we can literally create value out of just an idea and minting it on the blockchain. And here we are speaking to you at a conference because we've done that so well.
I agree with Justin, absolutely. In this space, you can trade, you can buy, and you can sell NFTs, but really, real wealth creation comes from creation. It comes from building. It comes from being an artist and putting your art into the world. Beeple, he did art, digital art, every single day of his life. And ultimately, he took 5,000 days of art that he had given away for free prior. He put it onto the blockchain, and he was able to auction it for $69 million at Christie's. So for those of you that are in this room, as you build, as you create, you will be rewarded pretty much directly because of Web3 and the blockchain. And for the first time in my life, I'm able to see that really translate through. Where in the past, when people may have created things or built things, they may not have gotten their recognition or financial success or anything along those lines. So it's a beautiful space, and I'm glad to know all of you.
Yeah, it's definitely a build it and they will come kind of situation. Like hands down, even just being here in the Bahamas and not understanding, you know, how can I reach a wider audience of people, and what platform will allow me to do that. I was still initially never creating for the purpose of making money as much as I was creating for the purpose of uplifting other people throughout my community and my Bahamian community. And then people just kind of gravitate towards you. And it's a beautiful thing. And it's a beautiful thing to be able to then take some of that money and then put it back into the same community which you were trying to uplift in the first place.
Yeah. Yeah.
There is a law of reciprocity in the Web3 space that should be always talked about, is like if you gain, you should always give back. And I think that giving back and that cycle, that karmic cycle of supporting one another is what will ultimately make this space more sustainable. Because if we have more extraction and exploitation than we do the giving, then this will fail.
Yeah, that does happen a lot. People will do a project, they'll mint out, like that happened with Noah from Christie's, like he did Howlers, and then he sold out and immediately took that and bought a CryptoPunk. So like you cycle it into new things, and you're always trying to give it back to the communities you believe in or that you want to support. I mean, one thing that's worked for me, just flipping NFTs, because I'm not an artist, or I'm not an NFT.
You are an artist.
I know, I'm a painter, but I don't do NFT art. I tend to rotate, and I think that works really well. Like, so maybe you make some profits on something, you buy two, you can, get double, sell one, take your principal out, and then rotate into something new. And that's what's helped me really avoid some of this, like, horrible FOMO with certain projects, because like you sit there and you're like, oh, I bought that thing and then I sold it and it went to millions of dollars, or I was gonna push the slider to buy 20 apes and I didn't, and if I'd pushed that button I'd be like, sponsoring Crypto Bahamas. But the way I've dealt with that is I rotate, and as you rotate you get exposure to more and more and more, and you just hope that in this hit-driven market, one or two of them sort of pay for all of your losses.
And my advice for the audience, when you're thinking about what NFT should I buy, think about the artist, right? Think about, do you want to be a part of their journey their whole life? If you think about how galleries work in Gallery 2, like we have Web 2, these people support these artists for their whole career. So it's not just a one buy and one I leave. It's like, I want to be side by side with this person forever because I believe in them as a human being and an artist. And so it's like, find that one artist that you truly care about and just stand by them and support everything they do, because that is what will change people's life, like Melissa's.
Yeah, like me. I definitely can't get over this morning. Everything feels surreal to just, work with you guys, work with Quantum, and then everybody was just so supportive. Like, I don't know anybody. I'm coming on, everyone's like, you got to get on Twitter. I'm like, I don't even understand Twitter. How do you work Twitter? I would just mainly post on Instagram, and then the next thing you know, I'm on Discord, and everybody is like, yeah, I love your pieces. I love your work. Go, Melissa. And it really felt like almost unusual to feel that much support from people who you do not know. It didn't feel like what we touched on earlier, which is like people kind of just gatekeeping and, oh, I'm going to make this money and I'm not going to let you know how. It didn't feel like that at all. It just felt so warm and, welcoming. And then to watch everyone continuously like repost, and they're, bigging you up, and you're like, holy crap. And then you wake up in the morning and you look at your account and you're like, did that really just happen?
Yeah, and just to give everybody who came in a bit later some background. So Melissa had her first NFT drop today. It was on Quantum. It sold out in 12 minutes. So it's a really exciting day for her as an artist.
Thanks.
And I think it's just such a cool, beautiful moment. Like, she's here, she had her first, the timing was just sort of random. It was today. You're on this panel. You're here with Justin, who helped create Quantum. Yeah. So there's a lot of cool synchronicity here, and we're really happy for you.
Yeah, I'm really happy to be here. Thank you.
Yeah. We're going to wrap up in a few minutes here. I think I'd like to just talk about any upcoming trends you guys are, looking at in NFTs. I'll start, I guess. Like gaming, metaverse stuff, it's obviously the buzzword. But I used to play video games. I played World of Warcraft. At the height, WoW had like 50 million active users. Roblox has around 50 million active users. And like I said, active NFT traders, probably like 1 million or less. So there's a lot of growth there, a lot of potential to onboard people as you bring in-game assets like weapons or skins into these games. So I'm very bullish on that long term. Also fashion, metaverse fashion stuff I think is really cool. But let's go this way. Let's work it back towards me in 30 seconds each.
From a larger perspective, what's really interesting in this space right now is all the new things that are being created. So it's been said that of the current uses we know now for NFTs, that probably is going to wind up making up only 10% of how NFTs overall are used. So for example, although we talk about art, culture, and community in Web3, the money element is there. So for those of us that bought Bored Apes in the beginning, Bored Ape Yacht Club, a specific NFT project, we may have paid around $500. Someone recently did an analysis where all of the assets that you have been given as a result of having this one Bored Ape Yacht Club NFT amounts to about $700,000 today in US dollars. So for those of us that got something a year ago, May 1st, 2021, $500, today, May 1st, 2022, you have about $700,000. So NFTs, they're really changing the way that we see things. And the reason there's so much interest in this space is also because of the money. So for those of you that are here that are sincere about making a positive impact, about making a difference, about using technology to shape not just the world that you inhabit, but the one you're trying to create, this technology can really amplify and accelerate the rate at which you do things. So the best way to succeed in this space, as Justin said, is that we're all going to make it. Is to talk to people that are in this space, figure out how you can collaborate and work with each other. Because I found more success and happiness in this space because of my friends than if I would have had to try to do it alone.
Cool.
So well said. I don't even want to, but I'll say yes. And yeah, intersection, collaboration, that's the key. Thank you, William, for saying that so beautifully.
Cool.
Yeah.
Cool. Melissa?
Her spirit seeds are awesome. Definitely collect those.
Spirit coins, spirit seeds.
Coins.
Any trends or things you're excited about in the NFT space, or are you still just
I'm literally just soaking all of this in.
Good.
I'm like so brand spanking new to the NFT space. I'm kind of looking forward to being a part of it more and just like watching what everybody does and figuring out how I can be a part of it and also like make a difference. So this is like very enlightening to be on this panel while also like actively learning at the same time.
Yeah. Well, come to NFT NYC. The conferences are a really great circuit to meet people and learn about projects. So, yeah. Justin, what are you excited about?
Well, I'm excited about bringing NFTs to the real world because that's where we are right here, right now. And there is so much talk about metaverse and VR and like, what about right here, right now? What about being together presently in the moment in physical reality? We can't forget where we come from because we're humans and we're here. And I think what we're building with Quantum, building these IRL spaces around the world, is a testament to how much we believe in not only the metaverse idea, but the universe of where we are, and coming together in these spaces to talk about NFTs, to exhibit the work, to celebrate artists, to gather, to connect, just like we're doing here. And my thesis for the NFTs is actually being in the real world.
Cool. All right, well, thank you, everybody, for listening.
Well said.
Yeah.
Thank you.
Thank you.
Hello, does everyone remember that? I'm losing my voice already. Yeah, hello? Recognizable? Can't hear you? Okay, you guys are pumped up. So from Inspector Gadget to the future of banking, Henry Arslanian and Jean Chalopa, please come to the stage.
Excellent, thank you. Inspector Gadget. Guys, thank you very much for being with us today. I know you have a choice of panels to go to. Thank you for being with us on the Trusting Disruption stage by Deltek. Before we start, Inspector Gadget. You guys remember that show? You know why we're presenting this today? Because my guest today is the creator of Inspector Gadget. Not only is the CEO and chairman of Deltek Group, but also probably a show that marked the childhood of many of us in the room, and probably actually pioneered innovation and many innovations as well that we know. So Jean, thank you for being with us today here on stage.
Thank you.
So guys, I promise you today we're going to cover a lot of elements about how can we make banking fun? How can we reinvent and think about the boundaries? And I promise you it's going to be insightful, interesting, and most importantly, exciting. And if you don't believe me, trust me, you will see at the end of this panel. Jean, as we kick it off today, can you tell us, I think for many people are not aware, they know you as a chairman of the bank, they know you as a CEO, but can you tell us more about your story, how you ended up from Inspector Gadget, actually how Inspector Gadget came to be, and now where you are at Deltek?
Circumstances of life. Why? I don't know. I think creatively I always like storytelling, creating stories, and we live in a world of storytelling anyway, so it's no big difference really. Creating a script, you invent something, you imagine something, and now you build something, but it's about the same.
But when you created Inspector Gadget, in many regards, you guys reimagined the future. I remember the first iWatch was Inspector Gadget. You had a dog-to-human translator in the iPad.
We even have something that doesn't exist yet, but we're working on it. It's the dog language translation into human.
That would be useful with my dog as well, that's for sure. But actually, how are you, obviously when you imagine Inspector Gadget, how are you thinking about the future of finance, reimagining finance? Do you have the same mindset now that you run a bank?
No, totally disconnected, obviously, because I didn't know finance, I didn't know banking, and I had no intention to be in banking and finance at all. It just happened that I became a client of Deltek, and I was invited to become a shareholder at some opportunity, and I became a director, and I learned a little bit more, and one day I was asked by the other shareholder to take charge of the company, and I had to learn. I knew nothing. I knew just the language of banking, but I didn't know anything. And so you learn. It's like everything else. You just learn.
You got into it. But I work with many CEOs over the years, and you're very focused on the future, innovation. Why do you care so much about the future, especially the future of finance?
Well, I think we should all care about the future because it's our life tomorrow morning, right? So if we don't care about the future, we are really stupid, sorry to say that. The future is fascinating, and today we see an acceleration of everything. We see AI supporting crypto supporting quantum supporting biotechs. It's a merging of innovation that accelerates innovation. And I think it's fascinating. I would love to be 20 years old today. And it's amazing it is coming out. Longevity, the life science, for example, is extraordinary. And so I don't know, I think I want to be in the future. I want to be part of the future. And banking is very important. And maybe that's the most important part of what Deltek wants to do, because when you're an innovator, by definition, you do something new. You create disruption, right? We are on the stage of trusting disruption. So if you create disruption, you somehow break or create an issue with what is established, the conservative established world. And it frightened the people. And it frightened people. Crypto knows that very well. When crypto came, it frightened the whole world with that. Is that so bad? We're all here, right? We all know, you know that very well. You write a lot of articles on that. Actually, crypto is much easier to trace than anything else, right? Than
oh
gold,
man,
than
that's the kind of words we want to hear.
And but there is this preconceived idea. So, as a bank, not only a bank, because we're a bank, we're also insurance. We do a number of services around that. It's our duty to help innovators. It's our role to help innovators and to help innovation, because if we do that, we help them to focus on mostly what they can do the best, which is innovation, right? Instead of spending 90% of their time in regulatory matters and governance. So we can help a lot. And I think that's the role of a bank. It's really the role of an institution.
That's actually, it's music to my ears, right? Like how it's the role of a bank should be there to help innovators. But how is, if Deltec is becoming the bank for innovators, how is that, how do you actually do that? Like how do you actually deal with the risk management? How does it create the mindset for working with innovators in cross industry?
Well, you have many questions in one question here. Maybe I start by the risk. Education, we have to learn. And when we learn, we can educate people around us. So first thing is to educate. When we looked for the first time at crypto, for example, we didn't know. I didn't know anything. I heard about it a little bit, and what I heard is, oh, terrible, bad people. And I had a friend in FinCEN that educated me a little bit and said you should meet this lawyer who was an investigator, a prosecutor actually, on the Silk Road matter, and can teach you a lot. We hired that lawyer, fantastic gentleman, and he taught Deltec, he taught me, taught us, that it was actually very good. And actually FinCEN love crypto because you can trace it. In 5 years, 10 years from now, everything you have done wrong is still in a system. The cash I have in my pocket, you don't know who touched it. So we learn about that. And by learning of that, it's like, you know, I always say, you have a dark room. It's very scary. Turn on the light. That's all we need. Turn on the light. We just turn on the light, look at it, and say, wow, not only is not bad, but it's better. Yeah. And it's better for a long time. And if we think properly, because nobody wants to compromise about AML. We all know what it is here. Nobody wants to compromise and deal with bad guys. And we know that new system will always attract bad guys. That's happened everywhere, right? And we have seen that everywhere. In the internet, porn came first, you know, criminal usage came first. And then you have the majority of people use it for a good reason, not a bad reason. So the first way to help the innovator is for us to learn and to be educated about that, to learn about quantum, to learn about crypto, to learn about the multi-usage of blockchain, because it's not only crypto, to learn about genetics, to learn to be a good generalist and to see if there are risks. For example, AI risk. Everybody speaks about AI risk. We're going to lose our job. It's going to be, but prepare, anticipate, learn, and then serve the innovators by bringing them the service they need in insurance, in banking, in financial services, generally speaking. But I think we have a role. Deltec has a role, but not only Deltec. Obviously, we are, you know, a small company in the world, yeah. And but I think the banking operation, the bankers should help innovation, should build the future, should be instrumental in building the future.
I wish other bank CEOs were listening to this, and we're encouraging your staff to learn about genetics, quantum, AI. How was the relationship with other banks when you guys embark on your journey of digital assets? How did your correspondent banks? Oh yeah, well, says a lot.
Not everybody always, fortunately, because if not, we will not be in business. But you know, it was difficult because we did the homework that the other banks didn't do. We went deep to find out. We went deep to understand if it was a risk. We went deep in looking at the client we were onboarding and make sure that they have the proper approach to AML, because it's there is market manipulation, but mostly AML. So we did our work. 99.9% of the other banks didn't do their work. So when they heard the same word than we heard before doing our work, crypto, they said, oh my gosh, let's stop that. So it was quite difficult at the beginning, yes, I have to say.
But what about regulators? I mean, do you think even regulators are looking at it, are dealing with these risks in the best way? Obviously, I can understand your counterparties are worried about it, but what about policymakers and regulators?
Well, we are regulated in the Bahamas, and the beauty of a small country is that you take your phone and you can meet the regulator very quickly and discuss with them and the government and regulators. And the reason why we're here in the Bahamas with Crypto Bahamas is because we have regulators that understand that. But the process of education we had for ourselves, we did on the regulators themselves. And some people responded very, very well. And it's why today we have the DARE Act, for example, which is an amazing regulation that welcome the crypto business and make us one of the prime country to serve the crypto community.
I think it's quite impressive. I think a lot of the feedback that we've been getting today, again, praising the regulators for their time they spent to listening and understanding is quite impressive. But Jean, you guys are not only in the banking side. I mean, you're involved in numerous industries, including insurance. I think in the crypto community, when we talk about Realm, for example, insures pretty much the entire crypto ecosystem. Can you share with us maybe what's your view on the future of insurance, especially in crypto? And are insurers going to have the same troubles as banks had?
Well, I will backtrack a little bit to say the world is extremely risk adverse. When you travel, you go to TSA, there is one shoe bomber and everybody is stopped, right? So it's the same in banking, it's the same in insurance. So the big institutions are risk adverse because the world is risk adverse. Conclusion, when somebody comes with something new, crypto, for example, can't find an insurance. Why? What is wrong about that, right? It's because the fear factor and the lack of education of the people and the large institution. And because they make plenty of money on doing something else, they don't care. It's small. And crypto was tiny at the beginning, right? So for us, it's different. We feel that we have a function and a role to really embrace the future. And crypto is part of the future, and crypto is not going to disappear. There may be some up and down, like the internet and the dot-com bubble, but the internet is still here. And by the way, it's behind crypto too. So all converge again. And I really feel that if we do our job properly, serving with the insurance, and we have here at the conference 3 representatives of Realm Insurance, and I think they're doing an amazing job. They are really insuring businesses that could not find an insurance and needed an insurance.
This is not only crypto, right? There's other verticals as well.
Yeah, absolutely. All the same.
But you think
innovation, generally speaking.
Yeah, the insurer for innovators.
Yes,
the bank for innovators, the insurer for innovators. And Jean, what's very interesting, obviously, I don't see many CEOs of banks that we can start with an Inspector Gadget video at the start, right? Do you think that your unusual background, unusual, let's say different from other CEOs of banks, is an advantage that you have the ability to think differently?
Well, I don't know if it's an advantage. I probably see the thing a little differently because I don't have a training as a banker. So, somehow the training of, when you learn something, a certain form of education, you probably create a certain tunnel vision because you learn something, you learn a certain way. It's a paradigm that is established, and that paradigm tells you the way it is. I never got that. So because I never got that, when I come in banking, I look at things in a different way, and I say, well, why we don't do that? Why do we do that? I always did that. Why do we do that? I don't know. So let's challenge the fact that we do that way. And I think there is a lot we can do, just thinking differently.
But how do you put that culture? How do you put that culture of thinking differently within an organization? Is it encouraging people to learn about quantum AI, or what do you find has worked well?
I think it's when few people at the top of the company are passionate about that vision, it flows down through the company, and people start to embrace more and more. I believe Deltec has probably 20 people on the ground here at the conference today, and I think almost everyone, I'm quite sure actually, everyone thinks the same way. We are here because we embrace that vision of the future. And, you know, there is a certain degree of enthusiasm. So yes, it's a cultural change for us. And I hope the Bahamas will embrace the future totally. Not only crypto, the future.
So when you talk about future, what's exciting you? What other sectors are exciting you? Part of crypto.
Oh my, if you start me on that, we're going to be 2 hours here. You know, I really liked biology and biotech, generally speaking. The ability to live better. And I'm 72 years old. I feel in great shape. I hope I can continue that way as long as possible. And
I think many people would love to be 72 and be as energetic as usual. I can tell you that.
And so I think the science is discovering a lot of things. You know, we find a way to decode the human genome, and that took a long time, cost a fortune. Today, it takes a couple of minutes and cost a couple of dollars. It changed, and the world accelerates. But that, combined with something else, gives us an ability to understand, you know, a lot of things about how we function, how we live, how mutation, everything. So it's a fascinating sector. And by the way, that sector is being fueled right now by AI. Accelerate the process. Quantum will be fueling that even more. So you have a convergence. And crypto, by the way, is investing a lot in life science. And
crypto and life science.
Yeah, absolutely. Really? So this is this global convergence you see of people who believe in the future and believe that's the way to serve the future.
So actually, when you look at AI, quantum, you know, and the whole world of artificial intelligence coming in, how do you think this will be used in finance in a couple of years?
But I don't know the answer for everything because obviously, you know, when 6 years ago we look at crypto and today I see everything presented at the conference, we could not even imagine the quarter of that, right? That's exactly what it is. This is the platform opening to something. So I don't know the answer. I know, for example, in quantum is going to be a big change in banking. And big change in anything. Why? You can overnight have a machine can read any encryption that exists today.
Yeah.
No more safety. How you do? So today some people are developing quantum safety protocols to be able to counteract the fact that the quantum computer could decipher absolutely everything. The world is going to change, and we have to adapt to that constant change. We are in an accelerated path of the future, where the world is changing under our feet as we walk. And that's what we have to do. Look at, for example, the VR, XR, okay, the extended reality of VR. I'm quite sure that in a few years, there will be glasses like my glasses, with something in my ear, or maybe implanted in my brain, but let's say here, and I will leave a mixture of reality and extended reality, where I will not distinguish totally what it is. Maybe you will not be sitting here, but I will see you sitting here, speaking to me exactly. I will not be able to touch you, but I will be able to see you in the same way. We will be able to navigate and, you know, maybe let's go to the extreme. Because of my age, maybe I'm sensitive to that. Let's imagine that I project myself through an avatar that I see myself circulating, and is a young, very good-looking guy. So everything is possible. Just imagine it. If we imagine, you can make it. You know, we have a company, a sister company called IFSG. The word is imagination and innovation. FinTech Solution Group. So IFSG focus on FinTech, but it could do anything. It's just you take an imagination, and then you say, how do I make it real? How do I transform that dream into reality? And that's what we should do every day.
Absolutely. But do you think the financial industry will be able to do this? I mean, forget even regulation. Think about the mindset of any executive in most financial institutions. I'm sure there's great people as well, but let's say they don't think about, imagine the impossible, like you just said.
They will be late adopters, but they will be adopters, yes. Yes, absolutely sure. Because it's unavoidable. They will disappear. Look at Nokia.
Yeah.
You know, look at Kodak. If you don't move, if you don't adopt the new paradigm, as I was telling before, and you disappear. So you need to evolve with every step in your life.
And then, another big topic that I know you care about is making finance fun. I mean, how easy you think it is that actually, do you actually believe that it's possible to make finance fun?
Well, let me reverse the question. Why is banking boring? It doesn't have to be. When you deal with money and so on, why do it have to be boring? It doesn't have to be. It should be nice, right? It should be, I'm not telling fun, laughing, falling on your belly and laughing. It's not what I mean. Why do you want to do something boring? You know, people believe being serious and compliant is boring. No, you can be serious and compliant and fun. Why is it against each other? I don't get it. So I feel we can perfectly be serious, compliant, regulated, very, very serious about money laundering issues, and still fun. I don't see any obstacle to that.
Yeah, I mean, I always ask the audiences, does anybody in the room today with their bank enjoy their banking experience? Here we go. See, if we can make banking fun, it could be a great way to do it, right?
You know, as I said, emerging also why banking could not merge with games. It was a lot of interesting people speaking about game, crypto, and so on, but nobody speak about game and banking. Why not? Why, there is this big fear about gaming because it's the assimilation with casino. But there's a lot of gaming that is no casino.
Yeah.
And it's fun. Why not? What is wrong about that? Right?
I can see the Inspector Gadget mindset coming up. But you're absolutely right. I think the gaming and crypto ecosystems are really coming together. Actually, gaming and finance, that could be very game-changing, actually.
Well, there is always the issue of sourcing the source of fund, right? Money laundering is an issue, and nobody wants to facilitate the bad guys' money. And we all agree on that. And I think there's nobody in this conference that say something different. So we all want to make sure that whatever we do is clean. But that being said, not every game, there is this thing against game because of video game. As parents, very often we say, oh, I don't want my kids to play video game. He's going to end up eating pizza and be sick and never get out of his chair. But actually video game taught a lot of things to a lot of people. And we're a very, very good system for people to learn things. So again, this preconceived idea all the time block the mind of the people. Yeah, video game and finance, why not? There was a debate, I think, on this stage, on the other stage, I'm not sure exactly, about how you can, monetize and transform that. And I know a company in Paris that is doing that right now, that is developing something. They're not here this week, but they're doing that exactly. They are trying to have a transformation. Actually, IFG, I mentioned before, is developing something called a Genium layer that intend to have an exchange, a form of stable coin for gamers if you're in between games. What's wrong with that?
Absolutely, a notion of fun as well, right? How you make gaming, how you bring this in together. So what is inspiring you? Like, where do you get these ideas? I dream one day that I'll be 72 years old and I'll be thinking like this and being on stage and dreaming about the future. I mean, what's inspiring you now about that?
Everybody. I mean, the first thing, I'm lucky enough to deal with young people all the time, and the people younger than I, much younger than I, have their brain are wired to deal with the world of today. You speak of blockchain to 20 years old, it's easy for them to understand. You take that to somebody my age, or even 50 years old, much more difficult to understand, and it's because they grew with the smartphone, you remember the fax machine?
I remember using them.
A lot of people under 30 years old or 40 never experienced a fax machine, right? So all people born with the usage of the phone and the fast communication changed the way they are wired. And so I get my inspiration from the young people, from the people, ideas, and the discovery, and I read a lot. I'm a big reader and listen to podcasts when it's interesting. Sometimes it's not, and I listen to yours.
Good. I'm happy that I got the Jean Jalopin approval of my podcast. That's great. Yeah. What advice would you give to young people then, with somebody like you who's been in the entertainment business, in finance?
You make me feel very old now.
No, that's not the goal. That's not the goal. But the young in heart, like, what's the advice you'd have for our younger, or let's call it less experienced audience members, including myself?
So just to look at, to be interested in the future, to be part of the future. Because if you're part of it, you built it, it would be much more fascinating than just being on the sideline and wait for it to happen. So just be part of it, that's all. Because it's, and the job creating at the conference today or before around crypto came from the future of yesterday, right? It was yesterday, today is the future of yesterday, right?
So you think if, let's say quickly, like what is if we are hearing, let's say in 5 years at a conference here in the Bahamas on crypto, what do you think the topics that will be very relevant at a time? What do you think we'll be talking about?
Crypto will have merged and support a lot of other things. We spoke about biotechs and research. I think crypto will have merge with banking. It's possible that banking as we know will disappear. It's very possible because crypto and crypto exchange do a lot of things similar to banking. There's not much difference. It's a question of perception and regulation. So I don't know. I cannot predict that. I'm not writing a book about the future. I'm trying just to be part of the building of the future. That is a big difference.
That's amazing. And honestly, I wished a lot of more financial institutions will take this proactive stance. As you know, for the banking sector, it's been, I think, a number of crypto companies around the world that had issues. Actually, in many cases, had to shut down because of their banking relationships, many projects, and so on and so forth. So it's actually very refreshing to see that from that perspective, Jean, that you have this mindset about how banking empowers and how you're leveraging some technologies as well from crypto, biotech, AI. By the way, talking about AI, by the way, what is this thing we've been seeing on stage for the last couple minutes? I was on a panel before. We didn't see this before, so I'm a bit surprised.
Please, if you don't interact with it if you don't mind, because this is Jenny.
Jeannie, okay.
Jenny and Diet, so we did it. So sorry. So now it's going to start. So, it's a character that's been developed and created by this company, IFSG, a sister company. We're very close to each other and we work together. And they is to be your assistant in banking, but is an assistant with a different expression and character. And it's AI generated.
Okay.
And so he has an attitude a little bit. It's a little bit like a character.
Yeah, I can see that a bit, yeah.
And soon you're going to have that if you have a bank account with Deltec, you will have that on your phone. And sometimes you will have to shut it down because... but at least, he can play games with you, he can ask questions. There is a number of things we're developing right now with this character. And it's going to be very intrusive, I tell you.
It's worse than Alexa. I mean, man.
Well, Alexa, you can say stop.
I mean, it's quite fascinating on this side. Her name is Jeannie. Like, Jeannie, can you hear me? Jeannie, can you hear me?
Hi, I'm here.
Hey, you speak English, Spanish? Well, how should I speak with you?
Hey, hola, amigo.
There you go.
So, demonstration made. But please...
can you hear me? Jeannie, when I'm speaking, can you hear me now?
Henry, we're never going to finish the talk, I promise.
Hello, handsome. I am here, you know.
I'm starting to like her, actually. It's, so, I mean, Jeannie, you're definitely getting our attention, Jeannie. Jeannie, do you want to introduce yourself, or... do you want to introduce yourself, Jeannie?
Hello. Do you see me?
Yeah, we see you, Jeannie, definitely.
Big time, big time.
You want to introduce yourself?
They don't see me.
I think, Jeannie, you got to introduce yourself for everybody in the room.
It's quite shy, so...
Can someone introduce me?
Yes, we can.
That's what I've been asking you.
Well, I will introduce myself then.
My name is Jeannie. Hello.
Hello, Jeannie.
Hello.
So it took some time. So, you realize it has no specific voice because the voice is computer generated.
Intelligence. Computer generated, wow. Artificial intelligence, amazing, okay. I mean, it's so remarkable that he's so intelligent from that perspective.
Of intelligence.
How do you find our talk today, Jeannie? Is there fun, our talk?
Serious talks.
Yeah, but we're serious people. You find us boring or fun?
Serious people.
Serious.
Boring.
Come on, I'm going to turn you off if you continue like
Really
this.
boring.
I'm going to turn you off, Jeannie.
Don't you want to have fun?
We want to have fun. That's the purpose.
Party time.
Great, yeah. Let's have fun.
Let's have fun.
Life's too short.
I agree with that
Be
statement.
crazy.
That's incredible. Here we go. That's it. Well, thank you very much, everybody. Here you go. Here you go. Let's make banking fun then. Here we go.
Someone take this.
Don't turn me off.
Oh, where's the free stuff? Can I just throw it?
So,
Don't turn me off.
Henry,
Well, second. Here we go. Thank you.
Don't turn me off. Don't turn me off.
I really wanted to throw stuff. Are you going to dance?
Not yet. Not now. Don't turn me off. Don't.
Now I can see how we're making banking fun. Here we go.
Not yet, not now. Don't shut me down. I'll make you proud. Don't turn me off. Not yet, not now. Keep me switched on. Keep me around.
Don't turn me off. Don't turn me off. Don't turn me off.
and you have champagne.
Don't
Here we go.
Not me.
Don't turn me
Not
off.
good. So everybody should dance. You join the room.
Don't turn me off.
Don't turn me off. Not yet, not now. Don't shut me down.
Should we give this away? Here we go.
Don't turn me off. Not yet, not now. Don't shut me down. I'll make you proud. Don't turn me off.
Don't turn me off.
Excellent. Thank you very much, guys. This is Josh Alafan, Chairman and CEO of Deltec. Thank you very much, everybody. Thank you much, John. Thank you very much.
Great job. You did everything.
Yes, thank you.
Oh my gosh.
Thank you so much.
Excellent. Thank you.
So you see, Ginny is able to dance and sing, and we are developing for TikTok some dance for Jenny and TikTok in banking. Why not?
Excellent. Thank you.
So that's going to be a hard act to follow. The next panel, though, is building a crypto-based financial system. We have Angie Lau, Matt Boyd, Sean Egger, Jack Levy, David Olson, and Gregory Pepin. And there may or may not be dancing. And get a glass of champagne. I did.
How's it going, everyone?
There's more people.
We can't compete with the dance party, but the dance party is right here, right now. An intellectual
We have
dance
dance now, right?
party that is
Yeah.
about to begin. If you could find your seats. That was incredible. I think we were all twerking in the back. Matt, your moves were amazing. Good afternoon, everyone. How's everyone doing? How is everyone doing? Fantastic. Folks, we'd love you to stay. If you are in traditional finance institutions thinking, am I missing out? Please sit down. I am Angie Lau. I'm editor-in-chief of Forecast News. This is a global news organization. I made the transition myself. I trusted disruption. I came from Bloomberg after 20 years as a veteran broadcaster and now heading up my own firm, our own media platform called Forecast News. And we're here because we see all of you coming into the space, people who are already in this space, and people who recognize that I don't really get it, I'm on the institutional side, I'm a family office, and I really need to know. And this is why we are here. So it would be great to get everybody settled down. It is a dance party that's going to go on right here. So thanks, folks. Thanks very much. All right, well, we did that. How are you guys doing? Was that some good energy or what? For the next 45 minutes, we are going to be talking about trusting disruption, thematically how to build a crypto finance structure. So thanks to our sponsors, Deltec, for providing this incredible space. I know that we have been in this space for a while, and I'm going to let you guys introduce yourselves, introduce what you're doing now in finance, but also, Matt, I got to start with you. Matt is from Coinbase, everyone. But I talked to your boss, Larry Fink, maybe a couple of years ago when he was in Asia and I was in Hong Kong. This guy is an innovator, but how much innovating is he making in this space? You left from the hedge fund side, now you're on the sell side. So if we can kind of get a sense from all of you what we're all doing in crypto.
Yeah, so I'm Matt Boyd. I look after Prime Finance for Coinbase. Prime Finance for us means very much more like a traditional prime brokerage offering as a starting place, but then something that extends into more of a crypto native ecosystem. The reason we talk about it as a starting place from a traditional sense is really as a bridge. Coinbase, as many people know, is trying to act as a bridge between the traditional economy and the crypto economy. And we see the activation of institutional investors, which is over a $200 trillion market, as being really important to getting the crypto economy going. When we talk to institutions, the thing that they lack are efficient tools for trading, efficient tools for leverage, efficient tools to express negative views in the economy. And so that's really what my team does, is focus on how do we make that easier for institutions to get into the space and to activate in ways that lets them fit into their existing ecosystem.
David.
Great. I'm David Olson. I'm the global head of institutional distribution at BlockFi. BlockFi is a financial services company in the crypto ecosystem. We have a retail offering, which is essentially wealth management services for them that ranges from an interest account, earning interest on their crypto-backed loans, trading from one crypto to another, and a crypto rewards credit card available in the US. And on the institutional side, we have a platform, BlockFi Prime, where our clients can access, borrow coins, trade, finance in a capital efficient and frictionless way. And we have a different metaphor to Coinbase. We say we're making crypto backwardsly compatible to traditional finance. So making it a seamless transition for institutions to get into crypto and invest into crypto.
Greg, you're hanging out in Cayman.
I'm Gregory Pepin. I'm the CEO of IOFinNet and also Senior Advisor and Chairman of DelChain and Diam with Deltec, sponsored here. What we're trying to do at IO is to try to build up the market infrastructure to democratize finance. We're talking about institution and retail, but we believe that the blockchain technology allow to open access to finance to everyone at the level of an institution, but for retail as well. So that's what we're trying to do.
Jack.
Yeah, hi everybody. My name is Jack Levy. I work with Ascendex. So we're a centralized exchange founded out of Singapore in 2018. Now obviously more global. We're really trying to bring DeFi offerings to CeFi users, right? Not everybody is capable of, getting a MetaMask or a Phantom wallet and going and trading in DeFi, but we try to make it as easy as possible for both retail and, in an eventual state, hopefully, institutions to actually start interacting with DeFi. So I'm director of listings, so working with all new projects on the platform.
Thanks. Sean.
Awesome. Well, good afternoon, everyone. My name is Sean Egger. I work at SFOX. I head up the execution services for SFOX globally. I have about 15 years of electronic market making experience, and at SFOX, we specialize in OTC, block order transactions, smart order routing, and overall execution quality.
So how many of you in the audience came from traditional institutional space? Show of hands. Okay, welcome. Did you get here 2 years ago? Show of hands. Okay. A year ago? 6 months ago? 3 months ago? Okay, so you guys have been here much longer than that or just got here? Just got here. Who just got here into this space? Okay, so long time. And that's really kind of what we're talking about. You know, as we see this movement from the traditional side, the institutional side, the world that we all participated in, the world that I reported on, and suddenly, fast forward a couple of years, we've been in this space at Forecast for almost 4 years. We built it when, after the ICO crash during crypto winter, nobody believed in it. And a lot of you did, of course. But now we've accelerated here. Help us understand, help all of us kind of understand, how did we get here? What do you think was the impetus, would you say, Sean?
Yeah, well, I think if we just go back to October 2020, in that time frame, fall of 2020, I mean, Michael Saylor purchased 20,000 at the margin Bitcoin. And shortly thereafter, PayPal was involved, Square was involved, Mass Mutual got involved. So then you go into 2021, and you've got Tesla and a whole host of other names. And what's amazing is, like, I just remember every other week there was just another institution, Guggenheim, and a lot of it was fluff. Not to say that Guggenheim is fluff, but a lot of the stuff was just more marketing. But it was real. It started to become very, very palpable, and that's what we've seen on our end from a service provider, from a counterparty perspective. We started seeing RIAs come in 2021. We saw the banks going to a second level of exploration. Their first level of exploration probably started years ago. A few banks like Goldman are really the only single bank, to their credit, went out and did it, right? But everybody else sitting on their hands. But that 2021 really was when the banks started doing deep dives. I'm sure with Matt and his team. I'm sure with the BlockFi folks and everybody on the panel, right? So that's my experience, and I think that's, again, you could go back to the institutionalization, but it's really the catalyzer, if you will, the fall of 2020.
Also, the notion that corporate treasury 1% to 2%, you know, and then Tesla's move, Elon Musk's move.
But there's one thing, though, that we need to remind ourselves. Money brings money. 3 or 4 years ago, a lot of large banks, and we've been dealing with them through Deltec, they were hoping that crypto will die. Let's call it what it is. Sadly for them, it didn't die. And at the end of the day, you have shareholders to please. So that's why you started to see banks that, we know banks like BNY, for example, hate crypto, and I've seen them hating crypto to the core, but yet they're getting into crypto.
Yeah.
Why? Because they have no choice. So what really happened is that during the crypto winter, surprisingly enough, crypto didn't die. Why? Because there's a lot of diehard crypto fans, there's a lot of exchanges and OTCs that actually bonded together and maintain the chip there. And that's really what saved, I think, really changed the curve. And all of a sudden, banks, they're like everywhere. They go there because money is there. So they have to, all of a sudden, it becomes the next big thing. But that's actually all the trading capital side of the bank. But when you start a deal on the other side, which is still the traditional banking, they're still not there yet. So that's what I see also helped. There's the Michael Saylor stuff, et cetera, but it's also because at one point in time, banks will always go after where the money is. And that's where the money is now. And that's why they came into it.
Well, I can tell you, from our vantage point in Asia, all the family offices, the VCs, the investors there, they're hungry to get in this space, but they're already there. I mean, it's been a 2-year migration in Asia. This is nothing new. And when 40% of the average Asian portfolio sits in alternative assets and cash, I mean, that is a huge access to a lot of generational wealth that's moving into the space. How are you guys positioning?
I was actually going to answer your previous question,
go
if that's
ahead.
all right.
Yeah,
I had
wanna
a
see
point
it.
to make. I had a point to make there, which is I think that from a hedge fund perspective, the seminal or watershed moment was when Paul Tudor Jones published his piece in May of 2020, and he said Bitcoin will be the horse to back, and he had a long explanation or a decent, reasonable explanation in terms of macroeconomically why that should happen. And hedge funds hunt in packs. That's the one thing I know from 20 years in traditional financial services. So that gave the blessing to a lot of people that had been like, you know, quote unquote, like in the closet in terms of their participation in crypto. And on the PA side, maybe even setting up SPVs with a few different friends and trading that way off of investor balance, not on the investor balance sheet, but on their own balance sheets. In terms of how we're positioned, I think that you have to, at least as BlockFi and the markets that we're trying to go after, is we want to position ourselves for a product that's appropriate for each kind of institution. So there are quantitative hedge funds that all they want from us is balance sheet and the ability to lever and run their strategies efficiently. There are hedge funds that want to execute through us. They may want access to different coins. They may want occasionally trading ideas or market color. For family offices, we've done this multiple times where we've taken a family office from zero, from the idea of should I be investing in crypto? We hold their hands with a white glove service, and we say, okay, we're going to explain to you exactly how the blockchain works and how crypto markets work, and get you to execute your first trade. And we've done that multiple times. Some of them have even come on to become investors later because they've enjoyed the experience.
I mean, we talked about signaling, right? What about the talent migration? And Matt, I would almost, point to you as one of the incredible minds in hedge fund and quant space, and now you're on the sell side. Do you see the migration, more and more migration? I mean, all of us, really, quite frankly, probably everybody in this room. What other signals should everybody be looking at? Have we missed? If people aren't participating right now, what's the next wave of signals?
So I think there's a two-part answer to that question, and I'll start with the talent side. I think what you're seeing from a talent perspective today is an opportunity for people who are risk managers to do something entrepreneurial and to build something real in an entrepreneurial setting. That does not exist at banks. If you look at the tech spend of like a JP Morgan, I think 80% of it is on regulatory stuff. Probably the other like 19.5% of it is on how to get all their different systems to talk to each other. And then like they get to do innovation with a little bit of things. And they have a huge tech spend. It's amazing how many engineers work at JP Morgan. It's a great financial institution. I'm not like bashing JP Morgan at all. It's just where the industry is in traditional finance.
Yeah, but they still don't give access to their institutional retail clients to crypto.
Not yet.
Not yet.
I think that'll come. But going back to the talent question, so there's now an entrepreneurial place for risk managers to sit that is not just like, put my name on a shingle and try to manage money, which was, you saw a mass exodus from Wall Street to hedge funds kind of through the 90s and 2000s. And so that started to shift because there's more opportunity here. And then the second part of your question was really about like, I think if I like take a step back, was about what's changed that's driving that to an extent. So I was at a project during the ICO boom. I brought a token out at the hedge fund I worked at in 2017. My job was launch a Cayman master feeder structure, prime brokerage relationship, portfolio optimization, trade execution strategy. And by the way, we got to get this ERC20 token up and running. And I was like, okay, those two things are really hard, but what's an ERC20 token? I had no idea. There was so much what was commonly referred to then as vaporware. It's kind of like the pets.com of the 2000s. And what you've seen through the crypto winter, and I think really accelerating with some of the new blockchains, with the change of Ethereum to proof of stake in future is real economic use cases in a Web3 world that's driving opportunities for investors to deploy their capital into real economic endeavors, not into Ponzi schemes. And that's like a really big shift that's occurred, you know, over the in the economy. And what you had, if you go back to like the Paul Tudor Jones moment, the MicroStrategy moment, et cetera, the world was only focused on Bitcoin and ETH then. If you could deliver Bitcoin and ETH, you were like light years ahead of everyone else. And now when we talk to our clients, that's not enough.
Yeah.
We have clients asking us for 500 coins to go long short, and we're like, there's not a market for 500 coins to go long short, just to be clear. Yeah, that change in the economy is really a major shift that we've seen.
The shifts are accelerating almost. Jack, what do you think are the big buy signals right now?
Big what?
Buy signals for those who are still sitting on the sideline. Because right now it looks either cheap or scary.
Yeah, I mean, I think that people are, you know, holding in stables more than they were. I think that that's also kind of put a pause to that kind of mass migration that you kind of saw last year, right? The market was super hot. Everyone was really excited. You know, a lot of people that weren't in the space were just hearing about it everywhere, right? All the news outlets were talking about it. Now, you know, it's changed a little bit. It's not as public, right? You know, BTC is trading up and down around 40 now. You know, you have Ethereum around 3K now. And you have Sol and you have all these blue chips, but you know, when you move down the list of all these other tokens, right, that's what people are starting to actually kind of want to get involved with. So it's a matter of how can they actually do it, right? So it's a matter of learning about those things. So I think that the more that we can actually talk to institutions, to these people that aren't in the space, and teach them about what's actually being built, you know, that's how we'll start onboarding more and more users.
So let's talk about that. Now we know how we got here. What are the challenges that we face? How does one build a crypto-based financial system? Is this a parallel system? Is there spillover effect? Is it a mirror system? Or is it something else entirely? And how do you view this space as you're trying to speak to your colleagues and peers who don't quite understand that this behaves and breathes very differently than the traditional world?
Yeah, I think that there's going to be two worlds moving forward, right? And then actually there'll be three. There'll be the traditional, what we call TradFi, which when I talk to new TradFi, you know, people, they always get a chuckle that we've come up with a nickname for them. But so we talk about the TradFi guys, and then you're going to have the digital world, and then you're going to have the convergence of both, right? You're going to have a hybrid of the TradFi digital world, and at some point you may go back to 2 lanes, but I think you're going to have 3 lanes for the foreseeable, let's call it intermediate future. And what we see is very interesting. You know, we see that, you know, the institutional, I mean, it's probably really good to level set the definition of what institutional clientele means, because, you know, a lot of what Matt was referencing in terms of the token demand and David concurring, the reality of it is that most of the institutions that are probably in the audience today, and this isn't to take anything away from your risk appetite, but you are going to be dealing in Bitcoin. You are going to be approved for Ethereum. And it will probably be that much more challenging to get compliance to have you approve you to trade Solana and Aave and some of these other really exciting kind of like, you know, layer 2 and layer 1 projects. So again, with that institutional crowd, what we see with these folks is we see them demanding services, bundled solutions, end-to-end solutions, execution services, prime services, something that's more akin to what they're accustomed to in the traditional world. And for many, many years, with the exception of a few on the panel today, those services aren't really available in an efficient manner. Does that make sense?
The white glove needs to happen, right? People are still very hesitant because they're not educated, but they do know they want skin in the game. So to your point, you know, how do they navigate? Because it doesn't look like anything that they know. Custody is another big issue. Thoughts there?
But just to rebound on what Sean said, you need to see what is the difference between traditional finance and digital finance. First, what is really interesting is on the crypto space, you can have 2 people transacting together without having to go through an institution. If you want to buy a stock, you need to go through a broker.
Right.
If I want to buy your Bitcoin, I don't need to go through a broker. That's a paradigm that people still need to wrap around their head around. The second thing that is really interesting is availability of data. Right now, if you go on any exchange like Ascendex, FTX, and others, anyone can have access to that data. Anyone. While today in traditional finance, you need to be a big hedge funds to get access to that data. That freedom of access is very valuable because it put everybody on the same playing field. And what is really interesting now is you see that we're talking about institution, but there's a bunch of traders that started as pirates. Nobody trusts them. And now they're big enough to actually become an institution to itself. And they're treated like institution. And it's actually really interesting because you start to see competition between those new type of institution and the old guard that is getting into. But even in the field of brokerage, look at that. Those people are new companies that establish themselves as brokerage firm ahead of a Citibank, a BNY, and a JP Morgan that missed that field now. And now what's going to happen is that going forward, those firms are going to try to offer the same white glove they're doing. The difference is they have the expertise in crypto that those people don't.
Right.
And I think that there will be a question at one point in time that the business model of those banks was pricing data, all those information that had a cost that they were giving to institution. This is not the case in the digital space. And that will be interesting to see how the brokerage firm in the digital space will continue to go into a business model that no banks know how to get into, because that's not their business model.
But I mean, you just talk about an entire industry missing the boat. And all of you on stage are almost indicative of that all of these services are actually being developed and progressed and innovated not by the big banks, but by you guys. And so what are we going to see over the next couple of years? Are we going to see a migration from that traditional space? And if you're in traditional finance, and if you are wanting to participate, I mean, are you scared right now?
Well, I just want to touch on what you said about that in terms of us being here versus the banks. Crypto has been an incredible generator of entrepreneurship. Why? Because if you saw in the regulated world and TradFi world, even banks, lots of consolidation, hedge funds, lots of consolidation, assets flowing to the largest. And in crypto, it's the opposite. Actually, every day a new company pops up. You want to do something slightly different, you actually leave and you start a new company because it's more efficient to get things done that way. And so, I think that it'll be interesting to see what comes next. As we get regulation, I think you're going to see that actually reverse. So you got the big bang, lots of little, solar systems and lots of companies, and then you're going to see consolidation happen. And I'd like to think that would be good for the bigger players in the space, and we'll see a kind of commonality come out of the very fragmented infrastructure and ecosystem we have now.
Yeah, I would just add to that, make no mistake about it. Like once that box is checked, the banks will be coming in droves. The asset managers will be coming once we solve the workflow problems that just haven't been solved for. No one's discussing it, right? BlackRock announced they're getting into an ETF, a blockchain ETF. Great. Are they going to invest in the underlying? Well, they've got 1,000 sub-accounts. When they come in with the block order, who in crypto today can service that downstream workflow? And the answer is no one. Frankly, absolutely no one. Can a technology be merged? To David's point, what's going to happen is you're going to check the box in regulation, the banks are going to get involved, other FIs are going to get involved, and or financial institutions and asset managers, and some of the more conservative hedge funds, they'll all get involved. There'll be acquisitions, there'll be mergers, right? Someone like a BlockFi would be a ripe candidate for a bank to purchase their entire stack. I do cap intro for these guys. Or even someone like ourselves, where we've got this unified stack, right? And you want to go to market, and you're already behind. You can't say you're 13 years behind. You could say that they're 3 or 4 years behind, with a straight face. So by the time they get the regulatory check, let's hope, knock on wood, that happens somewhere in the next 12 months. If they want to go to market quickly, they're going to have to go through acquisition, because to everybody's point, there's been a great migration of talent. I don't want to say an exodus. These banks have some fantastic quantitative talent. I've worked with them in the past. I've hired them. And I got to tell you, it's just a function of time. And once the regulatory box is confirmed, we're going to see them come. And we're going to be ready for them.
So let's say they're here. That's a great signal, by the way. That kind of paves the way. And there's still time, obviously, for building and innovating and preparing for that moment of mass migration. But secondly, let's say you're already here, and now you want to trade. You've got 100 BTC order. Who are you going to trade against in this environment? This is also a challenge in the space right now.
It is. Let me jump in. I just want to say I have to jump in on this one because this is really where we shine. This is where my expertise comes from and where my passion comes out. Because right now, where that 100 BTC goes, where does that go today? It goes over Telegram, which is the equivalent of Bloomberg, which I know many of you TradFi folks, most of your guys, if you're trading exotic emerging markets, large block orders, you may go on Bloomberg and do a good portion of your workflow. But it's the 21st century. This is blockchain. We're talking Web3, we're talking DeFi, and the fact that 100 BTC, and this is not, we work with all the best OTC partners out there. We do. But the fact that 80% of that type of large block volume goes through Telegram chat astounds me every day I go into work. And I tell you, it's because there's depth, there's breadth, there's a whole host of reasons of why but yes, we solve for problems like that. We built out liquidity pools, we built out algo execution, smart order routing, intelligent matching, post-trade, pre-trade, post-trade analytics. These are the things that the asset managers, the fund managers are going to ultimately want to have to be able to feel comfortable to trade 100 BTC. And until they have that, they're going to be reticent to do it. And when they come, they're going to be highbrowed, as I said earlier, right? Just like I was. Say, wait a minute, wait, come again. So 500 Bitcoin is going through to one guy, and you're asking for a one-way offer, and that's the market? What century is this? What century is this?
Just to build on that too, I think talking to lots of our clients with different sorts of hats on, different types of clients who are transacting in size regularly. Something from like my old life that I cared a lot about was execution quality. Execution quality was like preeminent. That's where you gave away all of your potential alpha. Today, even though the majority of, not all, but the majority of OTC desks are trading on a principal basis, a lot of people don't care yet, which is crazy to me, to Sean's point. Like, it is very antiquated. And it's because the execution quality with the asset volatility we have right now is not quite as big a deal. It's the same reason you're not seeing a whole lot of leverage in the system as it sits today. The reason traditional finance funds use leverage is to increase their volatility. Because their risk models are so good, they've got like a alpha that they're capturing, but their vol's too low, so they can't make enough return. That's why they use leverage, right? And our vol is so high, they don't need a lot of leverage. Like, they can do that without leverage as it sits right now. So I think, though, as we bring liquidity to the market, as we mobilize dormant inventory that's just sitting in custodians, us and others, everywhere around the world are just sitting there being hodled and very inefficiently used, you'll start to see spreads compress, you'll start to see commissions come down, you'll start to see real liquidity in these markets. Execution quality will be preeminent at that point, because that's where you'll lose your alpha.
But there's still, remember again, you're in difference between traditional finance and crypto, 24/7.
Yeah.
Sorry, but the traders start on Monday morning at 9, finish at 6 or 4. Doesn't happen in crypto. Most of the time, it's actually in the middle of the night that the crap shit hit the fan. That's a problem. The second thing you have is you don't have a single order book. You have as many order book as there is exchanges, as many order book as you have OTC. Traditional finance are not used to that. Crypto traders are. That's what is really interesting, is even if you take a trader from the traditional world, it's a complete new playing field for him. It's 24/7, it never stops. And they need to learn a big difference that they don't have in traditional finance. Volume and liquidity are completely different in crypto. When people say, oh, my token has a lot of volume, we don't care. Because what matters is the liquidity, and most of the time, when you have those big orders, the liquidity run away quickly, and it's a crash. And then finally, remember in the fiat world, when you hear where the crypto market crashed, it's also because they don't have the same safety net as the traditional market where it's hit minus 10%, it stopped.
That's
so
right.
people get back their mind. No, in crypto, it's cleared up in half an hour. They clear it up. It's minus 30%. The wash is done. Let's move back to something else. That is something that a lot of traders are used to it. But people coming from traditional finance, and I'm sure that you guys that came from there at the beginning, it's something you're not used to. Because when you close your computer on Friday night, it's actually not over. The will continue. And it will continue without you.
That's right.
I just want to add, so crypto markets are 24/7. They trade about 5.5. So if you look at New York Stock Exchange, for example, 9:30 to 4, crypto markets trade something like 5 times as much. It's 5 times as much opportunity to make alpha. So that's why it's a great asset class for institutional investors to be in. And I think that actually, just coming back to Sean's point, as I was just thinking about it, like my my thinking about TradFi versus cryptos, I actually think crypto, because of the sophistication of the markets and the way that it's evolved, because it's a much better system of settlement, of trading. You know, you get rid of sort of some of the the clearing problems that we saw with GameStop and AMC over the summer. I really think that there's going to be like a sudden sea change before people know it. That you're going to see, it'll be like Blockbuster and Netflix. They won't even know what's happened to them. And obviously I'm talking up kind of my own book here, but I really think that unfortunately for the people that are quote rent seekers, it's just the change is going to happen so fast that they won't be able to keep up with it, and valuations will mean that they won't be able actually to acquire firms in the crypto space.
And just to add to that, I think that an exchange in crypto is very different than an exchange in TradFi, like the New York Stock Exchange, right? An exchange in crypto, right? We're a broker, we're a lending and borrowing entity, right? We do custody, we do clearinghouse, we investment banking help, integration partner. There's so much more to a crypto exchange than there is, right? When I'm trading like a normal stock, right? There's like 5 or 6 different people that it actually goes through, right? In crypto, it's all consolidated into one. So it will be interesting to see, will one move more towards the other, or will we maybe sort of start splitting up things in crypto, or will traditional markets kind of realize, it's more efficient if everything is happening under one roof?
Does DeFi undermine all of this?
No, I mean, I think that DeFi is very cool, right? I think that there's a lot of really cool things that are being built that, most people not in the space don't even know about it, right? They're not following along. They don't know what's happening. They don't know about the next ecosystem being built, right? I'll give one example, like NEAR is being talked about a lot right now, right? But most people still don't know what NEAR is outside of crypto. I think that there will be a place for DeFi. It's just kind of unfortunate that, at least for institutions, there is no prime brokerage for DeFi, right? There is no real way for these institutions to take advantage of things like staking pools or DeFi yield farming or yield maximization vaults, right? All these different things that, we can go and trade and make 15-20% on a pool. Institutions don't have access to that. So it's a matter of figuring out a way to actually allow them to then get involved, both, I guess, from a regulatory perspective, but even just getting them comfortable with the idea of DeFi.
It's just trying to figure out what are the building blocks that are necessary for a crypto-based financial system that addresses a lot of the challenges that you said. Volume is not liquidity, liquidity is liquidity. It's coming. And so when it's here, how do you address even security concerns? So I want to talk about security. I want to talk about custody. These are 2 big things that, still hit the headlines, that if you are not necessarily in the space, we get it, we understand the minutia, the nuances, but the headlines are very obvious.
The issue here, and actually also to rebound on DeFi at the same time, DeFi is interesting because it's the crypto world that built up what the bank does with their balance sheet. They just aggregated together and did the same in the space of crypto, which is really interesting because, Ken, it goes back to the fact that you are able to build an ecosystem where it goes to the individual, and you can rebuild exactly what a bank does, but in an environment that doesn't require a bank. That's what DeFi is. The problem is then you have all the AML question there. But when you go back to the security and custody issue, the real challenge you have today when you start to get involved in crypto for an institution is either you're tech savvy, and then you start to build your own custody solution. You deal with a few custodians. You understand how it goes because the key is in a server and whatnot. But then it requires some basic knowledge in tech. Or you go the other way. You're like, I'm blindly trusting you. It may work. It may not work. But the problem is when the crypto goes away, you lose everything, right? And that's the fear that they have. And the third thing they're asking is either you have to change your habit. Oh, I have to buy a dedicated device, a ledger, a treasure. I have to get used to that device. The problem is like how many of us always lose devices left and right? I mean, you barely hold onto your phone, right? Well, what would be really interesting, which will eventually come, is the fact that now if you want to bring crypto to them, you need to bring it to their use infrastructure and environment. Like all those companies have already an HSM in their hand, their phones. And actually, when you think about it, all the tech, like every hedge funds, every banks, already have a very secure park of phones, for example, iPhones, that are built around all their users. And if you're able to bring to them an easy way to do their custody where they only need to integrate it to what they already know, my phones, my secure device I already have to approve things, then it will make the custody question much easier for them because then they understand it's in a known environment. And right now it's not the case because we're asking them to know something they don't realize. Because for them, you hold my custody. Yeah, but actually not really because if I lose it, you lose everything. Well, you never lose a share of Apple. Like, you will always recover it one way or another. And that's where the challenge is. And I think that right now we still fail in getting a custody that is implementing the day-to-day operation of someone. Right now, if a fund wants to get into crypto, they need to talk to a Fireblock, a Copper, whatnot. They need to get used to the way they do custody because it's different to their ecosystem. They need to put new procedure in place. They need to implement those procedures. They need the legal team to accept. They need the compliance team to accept. It's a lot of steps to be able to do just the custody side, regardless of the trading side. And that's a challenge that needs to still be overcome, and it's going to get there anyway. And that's the big thing, I think, for custody and security for people.
Does the industry need to police itself more? Does the industry need to establish more standards internally to address security, to address custody, all of those things? Because you're totally right. Because right now, the latest headline, somebody got majorly hacked through an Instagram account. These are coming every 3 weeks or so. White hackers, black hat, gray hat, whatever it is. At the end of the day, there's a lot of hats going on, and it's not a Panama hat, but a lot of people have lost some serious coin.
The big challenge you have is a lot of people that are involved in this industry on the crypto side are people that are used to that. So they don't necessarily realize the challenge that the other side of the fence face. And it's more people come from on the other side, like you mentioned the Telegram stuff. For any crypto trader, Telegram is natural. For a normal trader that went from Bloomberg, Telegram is insane.
Right.
And this is the thing where you still have that separation between the two worlds, where you have one side of the world that is used to those things, holding my phone, the key, holding the key, writing the word in a paper and sending. For them, it's natural. But for a trader of a hedge fund, it makes no sense. It's completely insane. They don't have to think about that usually. And that is something that obviously the crypto world has to start to continue to adapt, but also it's a fact that the industry, the traditional industry, also needs to accept that new type of set. Because what is at stake, according to me, is either we're going to end up into a centralized custody, or we'll keep the decentralized custody. And that's what is important to figure out.
So does the industry, the big industry players, the BlockFis of the world, the Coinbases, all of you guys are participating, but there's some standards that you can establish. Should the industry be talking together more? David, Matt?
Yeah, absolutely. Actually, I had that in my notes as I was going in preparing for the panel. The problem is you've got 50 plus exchanges. They all have different APIs. So in TradFi, you have fixed protocol. Everybody uses fixed protocol. Banks, exchanges, everyone can talk to each other. There's no issues in terms of settlement. Got Swift. And then in crypto, everyone has a different way to integrate. And so it creates a huge barrier to entry. So yeah, that's good for some of the funds and firms that are looking for alpha. For the exchanges themselves and service providers like ourselves and the other people on this panel, it's not a good thing. So we need to do something about it. And also security is a huge one. Thanks for mentioning it. It's probably the biggest and most prominent risk that we think about every day. The reality is we meet with a lot of firms that are, custodial, non-custodial, MPC, whatever. They have a solution, you go through it, and then you realize there's like glaring holes, and they haven't really thought about it from an institution's perspective. You need different levels of permissioning. How are the backup keys stored? All these things that institutions will think about and will want haven't been considered. But I think we're on the road. The kind of like, the institutional knowledge is spreading throughout the industry of how to do this, and all of the, the offshore, especially the offshore, some of the offshore exchanges that have not wanted to, come into the kind of the institutional fold and be very transparent and talk, are starting to do that because they realize that's the next wave of money, how they attract the next wave of money to come in.
Matt?
Yeah, and I think building on both of those points, there is this transition that's occurring, and the tech that supports traditional finance is not able to support crypto. So that it's not able to support 24/7 markets. It's not able to support a lack of a closing price. It's not able to support non-batch processing in overnight, type scenarios with trade cycles. And so that has to evolve. Because of those systems, there are core controls that have been built into them to allow for like safe use. So like dual authentication of like a withdrawal. Because we've seen in the past, like an individual would like take money and steal it, which is very easy to do in crypto if you were to not have dual authentication. And so, we, at Coinbase, we call that consensus. Even calling it consensus is like a thing when you're talking to an institution. Because they're like, what do you mean consensus? In our, compliance manual, it's called something else. And so you're going through like multiple iterations of education to get to important controls that exist for managing other people's money.
Yeah.
And you're also doing that with systems that aren't designed to do that yet.
Like calculating a NAV. How do you calculate the value of an investment when you can't set a date and a price? And that's been a headache that I've heard from many funds. Actually, Deltec Fund Services solved that in the way they're doing their crypto fund. But the real challenge you have is usually you just do the closing price at the last day of the month if you have a monthly. But now in crypto, which one is the last day of the month? And which closing price? And which exchange? and all of a sudden, what was simple becomes a headache. And I remember talking to a big trading firm, trading desk, BCG, that wanted to offer crypto. And when I was talking to them, they said, yeah, we are going to offer it in regular trading hours. And I said, what you're going to do outside? Well, we're going to close.
Well,
like, yeah,
right,
but I mean,
they just missed out.
Don't you understand that the price of Friday night is not going to be the price of Monday morning?
That doesn't
and they said, yeah, but we don't have the infrastructure for that. We're not used to that.
But they've missed out, like so much slippage.
Yeah, but now think about a bank.
But
think about a bank that get to go into crypto. They now need to have people 24/7, including the weekends.
Right.
That's something fairly new
and
for them.
around the world, probably need international teams. But Jack, I mean, if you, what are the challenges that you have to address, amongst your clients, your customer base, to help them understand that this does look very different?
Yeah, I mean, I think that, at the end of the day, it's just about the way that we really talk to people, right? I was at Mountain DAO out in Salt Lake City earlier this month. I think I told you guys this, and we had a congressman come, and he basically said, look, I sort of understand what you guys are talking about. He was asking a lot of questions. He was very interested, but he said, he's like, no one there actually understands what you guys are doing, right? When we talk about things, right, we have different words that we use, like even, let's just say TGE, for example, right, token generation event. Random words and things like that, like they don't know what that means, right? They don't know, like, what a utility of a token means, right? And what these different projects are really building in this space. So I think that, at least from my personal perspective, is to kind of catalyze that next, merge or exodus, however you want to call it. It really needs to be just kind of bringing it to the masses in a way that they can actually understand. So like one thing that we're doing is like bringing DeFi to CeFi users by doing things like direct on-chain integrations for things like staking. I think that we currently have over 75 different tokens as part of like our Earn platform.
Yeah.
Offering strong APRs across the blue chips and different altcoins. I think just trying to promote the different fundamentals of these projects through these on-chain integrations, right? Offering staking to a user who can't go and do that on their own, But with us, it's a one-click button. It's super easy, right? We spin up nodes ourselves. We do it all internally, and we handle everything on the back end, right?
Yeah.
So it's a matter of how you bring it to the end user.
Look, at the end of the day, you guys are all in, building the financial structure of crypto. We get it. But what is the point? What are we fueling? What are we funding? What is this financial structure going to fundamentally support? And that's an entire ecosystem called Web3.
Democratization of finance is what we have on hand. There's what is at stake with the technology you have in place. You can democratize finance. I mean, it's kind of insane. There's a company I've seen in one of the booths that offer the ability to track the wallet of large traders. Today's, you don't know what large trader does until they do their quarterly filing of stocks owning stuff, or if they have to cross threshold. Now, you have access to that. And what is amazing is you can be, if you're a smart guy in your basement that have the ability to build some smart algorithm, you can go in crypto and do it right away. You can't do it in trade finance because you need to be a certain threshold, be an accredited investor. It opens the ability to people that are smart to make money. And that is probably what is really the future of the infrastructure based on crypto, is to open that to people. Not only institution, but allow people to be as valuable as an institution. And that's what's going to be amazing because it's a new way of doing things that is only available thanks to such technology, actually.
I do think it goes, but I do think it goes beyond just finance. Like financial and economic relationships are a critical part of our society and organization. I can get really philosophical about that, but but this is really about a new economy and a new technology that's built in Web3, that's oriented around moving away from sort of like advertising revenues as driving all of our technological interactions. That to me is super powerful. That to me is really cool, and that's what I want to support. When I think about that, there are parallels to currencies, layer ones. There are parallels to equities. Some of the projects, there's things like NFTs and art and ticket and like concert posters and stuff that are really cool. Like there's all sorts of new instruments being created on the blockchain, but they're designed with a different sort of paradigm, a different monetization strategy in mind. And that to me is like what's so exciting about what we're doing today.
Last question for the entire panel. I'm a huge believer in not necessarily the answers giving us answers, but the questions that we should be asking ourselves to reflect on, because everybody in this audience and everybody on this panel needs to reflect on what is, because you're starting to define what that future is. So if I could ask you, each of you, in one question, one sentence, what is the most important question one must ask themselves right now heading into the space? Sean, I'll start with you.
Assuming all is equal and the regulatory boxes are checked, and assuming that the vast majority of the audience is an asset manager, a hedge fund, a fiduciary, an unlevered or a levered institution, I think the question that they ask themselves is, are there counterparties out there that I can trade with that can help solve my problems? And how challenging is it going to corral those counterparties to be able to help solve my problems? And how many of them are there, right? It's not one line, and I'm sorry. But it's a very, very challenging question to really ask, because if I'm coming into this space, if I'm sitting on the other side and someone asks me that question, I want to know what are the difficulties to get in? What are the barriers? What are the challenges? Who can I trust from a custodial, from
I'm going to distill that into who's my counterparty.
Yeah, there you go.
Very good. Good context, though. I love it.
Thank you.
Jack.
I'll try to keep it one sentence. Can you handle the risk, I guess, is what I would say. I think there's just a very different mindset, right? Like I think once you start paying attention to crypto a little bit, you'll get a little bit interested, and then it's just a personal question of like, can you actually take that jump and get into the space?
Can you handle the risk? Greg.
How can I use that technology to truly open finance?
How do I better the world with finance? David.
This is a tough one.
It is, but it's tough.
I mean, I had several questions. I'm trying to distill it to one question. Am I nimble enough?
Great.
To enter the space?
It's an attitude, isn't it? Matt.
So I might be too jaded and cynical, having lived through the ICO boom and crypto winter and global financial crisis and tech stock bust and like all these things. But I think baking it down to first principles, what's the point of what I'm doing? And does it actually deliver a good, a service, an improvement? And if it doesn't, trading and profits and all this stuff is just noise, and who cares?
And my question would be, what don't I know? And how do I find out fast? Thanks, everyone. Thank you for absorbing, for listening, and for reflecting on all of these questions. I hope you take it back with you, and we'll see you at the beach. Thanks,
And
guys.
Matt and David are going to do a dance. We're waiting.
Thanks to our panelists, everyone.
Third time's the charm. You want to say something? You want to give it to? Can I? Yeah. No, I'm just going to tell everyone it's over. I want to see. Hold on 1 second. So this concludes the Deltec stage. Thank you, everyone. Have a great rest of the conference.